All right, guys, welcome. We got 3:02 Eastern. That's my time right now. If you guys want to come up and speak, you guys have questions as we go, feel free. If you do feel your question can be held to the end, that'll help us get through this a lot faster. So if you do have a question, you can hold it to the end, or you can even tweet it to me. Write it down, and whether you ask it at the end or you just send me a tweet, I can follow up with you. So yeah, I hope everyone's having a good weekend. I've had a great weekend. This was like one of my first weekends off, and just kind of had the weekend to myself. So I am relaxing today, and I actually was up till about 3 a.m. Eastern on Saturday morning watching the crypto flash crash, and that was interesting. I know there was a lot of people up late. I think it happened about 10 or 11 my time, roughly, where Bitcoin went down to, I think it was like 42K. Ethereum went way down and stuff. So that's been a big talk over the weekend, but it looks like that it's bounced back pretty significantly. So yeah, Bitcoin's at 49K, Ethereum's at 4,100. If you guys can hear me okay, if like I'm loud enough, just like give me a thumbs up or something. If I'm not, just let me know, Lana, and I can change stuff up.
Okay.
So Lana, I don't know. I have not done this part yet, but if you know how to do it, let me know. I have some stuff in my pinned tweet that talks about my indicators I use and all that stuff. Do you know how to get that up here on this Twitter space?
I actually don't. I think
Okay.
Amina is in here. Amina hosts a space calls too. Can I make her a co-host because she knows how to pin stuff?
No problem. That'd be great.
Okay, let me see.
Amina, she just summoned you. So anyway, I hope everyone's having a good weekend. I've had a good weekend. Last week was definitely pretty choppy for the overall market. It was pretty much a continuation of the week before, and depending on your level of experience trading stocks or doing this thing, it might be newer to you. I know I'm not like a 10-year, 20-year veteran trader. That's not me. But I actually did very well these last couple of weeks, and I think I'm pretty satisfied with how I navigated stuff. I think it was like probably 4 weeks ago. I said I'm gonna start going cash heavy. I'm not gonna be holding stuff really overnight if I don't have to, or over the weekend if I don't have to. And I've kind of changed up my style for these last few weeks. um, with that being said, the topic today, like what we're going to cover today and the purpose of it, um, is we got technical analysis. That's one topic. So charting, indicators, and these are things that I use that I find helpful for me. My way of doing stuff is not the way. It's not the way to do it. It's not the best way. I'm not going to make an argument that how I do things is the best way. So if anything you can take away from it is apply it to your own trading strategy that you have right now. If there's something of value that I have or that I share and you can apply it to your own strategy and you're having good results with it, tag me in tweets. Let me know if something's clicking or if something's not clicking. Let me know. I feel like I'm pretty good at responding to those things, especially when it comes to like all the indicators and the TA that I do. So today we'll cover TA. We're going to talk about how to analyze market conditions, and we're going to talk about building watch lists and how to apply all those things together, your TA, your market conditions. And the reason why I bring up analyzing market conditions is it can be really easy to find a particular company or a ticker that has a lot of good news catalysts coming up. We're hyped about it, but the thing that I got, it's in my pinned tweets, and it talks about I think it's about 7 things you have to respect that I found I have to respect at any given time. and I have to define like what the need of the moment is that day or that week. And one of them are overall market conditions. And I think we are in kind of like this season in the market where we can have a very bullish outlook on a stock or company. We could have a very bearish outlook on a stock or company. But before we can latch onto that bias and run with it, and make trades that support that, we need to respect the overall market conditions. Because if we are making trades without that going into consideration, we're gonna get caught blindsided, and that's from trial and error. I know there's a lot of people on here that have experienced that. They said, "Oh man, like great news catalyst for this," and maybe the stock was already on a technical side, like overextended, and it just couldn't go any higher, just as far as technicals go, and it completely it completely knifed. Same goes with the market. If you have a play that you got your eyes locked on, and this market pulls back like it has, it's gonna hurt. It's gonna hurt you. So analyzing market conditions is like the meat and potatoes of today. That and applying TA. The watch list stuff is really more of a subcategory, a second to all these other things, as far as I'm concerned today. But analyzing market conditions, because I think where we're at, we have to respect that the most. And so, what I want to start with, Lana, thanks for, or Amina, thanks for posting that thread I have of all the tools, resources, and stuff. So in that thread, if you guys want to open up that thread, you will find at the top, like the very first comment, I talk about the technical indicators I use and the charting tools I use. Right below that is the time frames and all that. So I want to, since we're talking about overall market conditions, the way the market is right now, I actually want to begin with how can we tangibly apply this like tomorrow morning? If we are waking up and we're getting ready for the market, and I want to make this just as simple as possible to apply this. So tomorrow morning, right? I am on Eastern time. The market opens for me at 9:30. And of course, pre-market begins at 4 a.m. my time as well. So what I like to do, I don't do a lot of pre-market plays myself. I like to use the pre-market though to paint the picture for the day. And so when I'm doing pre-market analysis, I'm starting that anywhere from an hour to an hour and a half before market open, because by then I find that most of the picture that you could get for the day to come is pretty much painted pretty well. That I find the most success in that. So I'm not really, if I'm not going to play pre-market, I'm not waking up at 4 a.m. doing charting and stuff when stuff can change so fast. A lot of news is announced about an hour before, like the 8:30 time frame for me. That's when I see the most news come out, the most releases come out for companies. And in that thread that I have posted up there, I listed some of those resources I use. I use Stock Titan. They have a Discord that you can have alerts and stuff when brand new news gets announced. And then I also use that doco.com. And that is an awesome resource. I really recommend that resource. So that's what I start with. When I start my day, I'm looking at the overall market conditions first. I'm just taking a look. And then I'm opening up the news and seeing anything that came up, any filings, you name it. And for my pre-market analysis, the time frames I'm using predominantly are the hourly, the 4-hour, and the daily. And with that, all the indicators I'm using is listed in that thread. I'm using my moving averages, your MACD, RSI, DMI, stock RSI, VWAP, all that stuff, volume. But mainly when I'm doing pre-market analysis, my sweet spot personally is the 1 hour. If I'm right now, if I know this market's pulling back, but I'm not sure how far it's going to go, and I need to kind of take this market a day at a time, and I'm limiting my own swings, I'm using the 1 hour. But I'm also respecting the 4 hour and the dailies for these indexes, but also individual stocks. So let me see here. So by a half hour before market opens tomorrow, I'm going to probably be tweeting what I see with the SPY, what I'm seeing with the small cap ETF, the IWM. If anything is going on with crypto, I'll talk about that because there's some inverse relationships with like crypto I notice, and then some meme stocks. So that was one alert that I've had going on, was a lot of different meme stocks, and those watch lists I have for like meme stock sympathies and stuff. Some of those are in that thread posted at the top, but we'll start with the indicators. So why I got to explain like why I use what I use and why that works the best for me. So first of all, the moving averages, the 10, the 21, the 55, 100, and 200 are kind of like milestone moving averages that I'm looking for particular trajectory and behavior in any given security, and it's painting the picture for me. So one example I'm going to give was SPY last week. SPY last week was extremely choppy. So I'm going to look at, let's see, we had Friday, Thursday. Let's look at Wednesday. If any of you got your charts open, I got Wednesday opened up for the SPY, and the indicators I have right in front of me is the DMI, the directional movement index, the RSI, stock RSI, and the MACD as well.
Dave,
And yeah,
I think you can actually screenshot that, and I'll put Amina back up a speaker so she can pin it so they can follow along. I think that might work.
sure. Yeah, I can do that. Give me 1 sec here.
Thanks, Amina.
Lana, how do you not know how to pin tweets, darling?
I don't really host space. Appreciate you.
Alana, you just want me to tweet it?
Yes, tweet it, and I think Amina will pin it up there so everyone can follow along for visual.
Gotcha. Give me 1 sec. Yeah, once I get validated to do YouTube live streams, this will be way simpler. So I apologize, guys, for that inconvenience, but that is what we're working with today, and we're just going to roll with it. But yeah, I do want to use this as a opportunity here just to show you like what I'm using, why it works for me, and if anything you can apply to what you're doing, awesome. Let's see here. Okay, I'm just going to tweet it real quick. All right, just tweeted. So if you take a look at what I just tweeted, I'm looking at the hourly chart right now, and let's look at Wednesday. That's what I want to look at. Wednesday was a really big day, but I would say Thursday also had a very interesting Wednesday, Thursday, Friday was very interesting for a number of reasons. So I want to start with Friday, okay? Because Friday caught a lot of people off guard. Friday is the you can see it. It's the furthest one on the far right on that chart. And what I want to point out here is if you look at the pre-market in the morning, right, it's a continuation of yesterday's of the Thursday bounce, so to speak. And people were like, "Oh, SPY is going to recover." They're looking at these chart formations, they're seeing flags, they're seeing you name it. And then pre-market, it's going up. And I'm looking at this hourly chart, and here's what I'm looking at. The very first thing is I'm looking at the RSI and the stock RSI. The stock RSI and the RSI are both pretty high. Like, to start that day, to start the trading day, and to have the stock RSI and the RSI up like it is the first warning for me, because basically the way I use stock RSI is like, if the stock RSI is up, it means we have room for a move down. If the stock RSI is down, we have room for a move up. It's just identifying what do I have the greatest room for on this trade. So guys that just joined, I just tweeted a screenshot of SPY. That's what we're looking at right now. It's the hourly chart. And the other thing I want to point out is look at that DMI indicator on the SPY. And you see the purple line and the green line and the yellow. Well, the purple and the green line, that is your price spread. So when the green line is above the purple, that means you have a bullish price spread. If the purple is above the green, you have a bearish price spread. And then your yellow line is just your ADX indicator. You can actually use the ADX alone by itself, but it is included with this DMI, Directional Movement Index indicator. Now, here was the other warning that I saw for Friday, and where my brain was like, ding, 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 watch out. This might pop, and then it might drop. And I tweeted it verbatim. Some of you guys followed me like that. And so this is what I'm looking at. I see I'm looking at like an aggressive crossover on the DMI price spread. You see the purple just, converging with the green, and it shoots straight up like that. And it shot up. It actually shot up and did that pop, that crossover, when the stock was going up to the as you can see, the 100-day moving average, that green line on the chart. That's when the actual price spread indicator, or when that crossover happened, when the bearish crossover happened, the stock was going up. Or sorry, the SPY, the ETF was going up. And that was my, okay, this thing's about to happen. I have a stock RSI that's high, so it has more room for a move down. I got my RSI, it's like in the 60s maybe, or 50s. It's not overbought by any means, but it's up there, so I got more room to go down. And then this DMI indicator I'm looking at is telling me the price spread is bearish. However, the stock is trying to punch through that 100-day moving average, that green line on that chart you see on Friday. And so that was one of my tweets as well. I identified the 100-day moving average, that is something that if SPY is going to reflect any sort of strength for this market, I want to see the SPY break above and retest on that 100-day moving average, because that was the next thing on the chopping block. And it didn't. It hit the 100-day moving average just perfectly, but it didn't last at all. And you could see my backup plan. If it broke the 100-day moving average, the next spot was that upper trend line I drew. That black line is an upper trend line from the last, it could be 10 days, 2 weeks, whatever it's been, I can't remember. But then that was my next, target, so to speak. All right, if SPY shows strength by pushing up through the 100-day moving average there, then that upper trend line is the next victim. It's got to take that upper trend line. If it doesn't, we're going to go back down. Why? Because all the other indicators are saying it's time for a move down. The stock RSI, the RSI, and even more importantly, the price spread crossover that was super aggressive on the DMI, that was the biggest screaming, like, this SPY's about to knife, watch out. And so I posted certain numbers that said if SPY breaks this and then breaks this and then breaks above this next part, let's say it was the 200-day moving average above it, that purple line on the chart up above, that's when I would have tweeted, like, all right, guys, like, SPY is showing some strength of a comeback. This is good. Because with that, you're going to start to see your other moving averages curling up, and there's some more bullish action to follow with that. But it didn't happen. And I tweeted and said, all right, it hit the 100-day moving average. It's not breaking above that. The price spread just went even more aggressively bearish on the DMI indicator. Watch out. And lo and behold, Friday was, it was a bloody mess for SPY. You back up. Let's back up to Thursday. It's Thursday on the SPY. With that same screenshot I have at the top of my page. If you look at that screenshot on Thursday morning, look what I'm looking at in the pre-market. I see a stock RSI that's pretty low and it's got room to go up. I have RSI that's decently low. It's got room to go up. And then I'm seeing MACD is curling up. I'm like, but MACD is a lagging indicator, so I don't use that as much weight as some of these other indicators because you can get faked out really easily. But yeah, that made me go, the MACD. But when I looked at the DMI indicator and I saw the trajectory of what looked like a bullish crossover, I was like, okay, there appears to be we're going to have a move up this morning. And I tweeted, the first target is the 21-day moving average, that blue line on the chart. I was like, that's the first target. If we break that, the next one's that 55. Look at it. It just rode the 20. It broke through the 21-day. Then it went up to the 55 and just hovered right below that the whole time. And eventually in pre-market on Friday, it broke above the 55. But again, I looked at these other indicators and I'm like, that ain't happening. When I'm calling like bottoms, like I did Wednesday I called the bottom by 16 cents for the day. The price at open was like 260 or 261. And I called bottom at 455.16, or sorry, 455.46, and it hit 455.30. And the reason I was able to call bottom was I looked at historical daily resistances, historical daily highs, and I tried to find some, like a group of resistances that would be the first, kind of like that first real test. If this thing knifed like crazy, to find some real solid daily resistances on the daily chart from the past. And so that's how I called that bottom. But I also called it based off of doing some Fibonacci retracements on like the daily and the 4-hour chart as well. So when I do a live stream and I can like draw the fibs for you guys, it'll make so much more sense about why I'm getting these certain numbers and certain levels. Let's see. I'm going to pause here real quick. Lana, I just want to, if you can make sure I'm staying on track here. So.
Okay.
Give me one sec. Okay, so, right, I'm looking at the market conditions first. Going into the day last week, like Friday, Thursday, Wednesday, I had my watch list of certain stocks that, whether they were bearish in my opinion on the chart or if they were bullish, that really didn't matter to me as much as seeing these overall market conditions, like using the SPY and stuff. And the reason is like when these ETFs like the SPY are pulling back like they are, it's going to affect the whole market. So like whatever your idea, your bias, your thesis, your DD, it kind of goes out the window just because of technicals in the overall market conditions. And now I'm gonna screenshot another chart here. And I'll tweet it real quick because this is also an important angle when doing your pre-market analysis before you trade for the day. And I'm also just going to use the SPY as the example. So 1 second, about to tweet it.
Amina, you got that right?
Yeah, I got it.
Thank you.
Thank you. There's probably followers of mine like, why is he posting just like screenshots of charts with like nothing?
No, they know what you're doing.
Yeah,
I'm people now.
it's all good. So
Yeah,
I just
it's up
posted
there.
right now the 4-hour chart of the SPY. So if you guys take a look at that screenshot I got up right now of the 4-hour chart of the SPY, I'm just gonna walk you through like what I was seeing for like the last week. Okay, so you see it hit 473, right? It popped up like it did, and from there it started to pull back. And I want you to really look at the moving averages that are on the chart. The moving averages are all those different colored lines, right? And you can see if you look closely that like the 10-day moving average is yellow, which I know is hard to see on this chart. I'm sorry. The 21-day moving average blue, 55 is orange. I got the 100-day at green and 200 at purple. So what I'm looking for is, let's look at like the 24th. On the 24th is when you start, you see SPY popped up really good like it did, but then it gapped down like crazy, just like absolute crazy. But I want to point something out to you guys going into close on the 24th. You see the moving averages. There's really no crossover. It was a bullish day for SPY. Everyone's probably buying calls at the end of that day. And I'm looking at this 4-hour chart, and you know what I see? I see like right at close or right before close, I see the DMI indicator cross with a bearish price spread. I'm like, what? Like that doesn't make sense. Like, why is there such an aggressive cross spread or price spread crossover? And that was my first warning, like, oh God. So the price spread indicator was the first like red flag for me. And you even saw, gosh, look how deceiving the MACD is on the 4-hour chart for the SPY on that day, on November 24th. You have your first green tick. So you already know that people are like, all right, SPY is recovering. It's heading back up. I'm buying calls to 470 or for whatever. That's not what these tools are telling me that I'm using. And so I remember like talking to I got a private group that I message on Twitter. We go over just some different ideas and stuff. And I just said, you guys just be really careful for the next day, because this is what I'm seeing. And I don't even know if anyone caught it. If I messaged them, I don't know if anyone read it, but I was just like, be careful. And then it was crazy because then a couple of them were like, oh God, futures are dying right now. Futures are dying. Like everything's dying, right? And everyone's like, oh crap. And so of course it gapped down like it did the next day. So then pre-market that next morning as well, you're looking at moving averages crossing over or crossing under. And, I'm switching back between 4-hour chart, 1-hour chart, and just comparing like, what's going on here? What's the picture? And at least on the 4-hour chart, the 21-day moving average was looking to cross under the 55-day, which that's a big like heads up. That's like, watch out. This is at least going to flush. It could flush today, and it did. And I'm glad I'm not just using the 1-hour chart. I'm using the 4-hour, and also the daily. But it flushed that day, and then as you look, what's next on the chopping block for that 21-day moving average on the 4-hour, and you look at the next day on the 29th, or sorry, November 29th. Yeah, I'm looking at November 29th on the 4-hour. You see now your 21-day moving average is approaching your 100-day moving average. And so I know firsthand that the first thing that this has to do is break above all of these moving averages that day. It's got to tear through the roof to make a recovery, because the moment that thing crosses under, and the moment that your price action is kind of topped out, watch out. So when that happened, that was like, so yeah, November the 29th, when that day ended, I was like, this is just going to get worse. And then it gapped down again. Same thing. It tried to pop in the morning. And you can see it got rejected on the 4-hour chart on the 30th by the 21 moving average. It went up, it tested it, it got rejected, and yanked straight down. So what I'm trying to say here is, when you're painting a picture like this day by day, you have to be, no matter how optimistic you are about the market and individual security, or if you're bullish, if you're bearish, you have to respect what the technicals are saying. I'm a very technically focused trader. I don't really give a ton of weight to other factors. I'll be honest, I just don't. But I'm looking at this 4-hour chart on the SPY, and I'm already saying, like 5, 6, 7 days before, watch out for a death cross, that's when you're, like in my case, I use the 21 and the 200 day. That's when your 21-day moving average is looking to cross under your 200-day moving average. That's what I use. And I use that on the hourly chart to do more like day-by-day stuff, but I also use it on, charts like the 4-hour, where you're zooming out a little more and you're looking at bigger picture. And what just happened on Friday with the SPY was a death cross. It officially, like, the moving average officially crossed under the 200-day. And to me, that just says, like, okay, if we don't have strong bounces from here on out, like if there's not strength from here on out, it can just get bloodier. And that's where you need to start drawing your support and your resistance lines on your chart. You need to, this downward channel, I've already drawn out like my upper trend line for this downward channel, because that's another key area where it needs to break above to recover. Now, when you look at SPY, when you zoom out, like on the daily chart, I'm just going to zoom out on the daily here. Okay. Yeah, so when you are zooming out on this chart here, I'm on the daily. Let's see. And I'm going to tweet this. Might be easier. Yeah, I'm going to tweet this. So I'm going to screenshot this so you can see it. How's everyone doing? Does anyone have any questions like at this moment? We can take a little break.
I know that I think the Darth Watt wants to say something.
Yeah.
Do you have anything? You have any questions?
I did, but I was content to wait till the end. But I'll just toss one in real quick. First of all, thanks for doing this. This is an awesome picture to word relation for this. My my only question coming out right there is where we're at right now is that do you ever find that there's a time when you're just you're looking at this technical analysis and it's just things aren't doing what they should do, and it maybe, I guess, like leading with how you first felt about the stock to get into it takes over the technical analysis at any point?
Mm-hmm. Like, so is your question like, how do I navigate when I have like that? I do have maybe some DD I've done. I know there's news catalyst coming, right? And now I'm tied to this particular security, and I kind of have that in the back of my mind, right? Is that what you're saying? Like, how do I
Yeah,
how does that relation with technical analysis work for me?
like you kind of touched on it that you are a technical trader, that you look at that the technique, what you are seeing technically with the charts and graphs. And I guess my question is that I buy the stocks that I use, that I love, that I enjoy. So seeing the technical side of this is extremely informational and valuable for me. So I'm kind of trying now to look at it in a sense where if I start using these technical analysis, at what point do you feel that, okay, the technical doesn't look the way how I feel about the stock? So is there, do you just like grin and bear it and say, you know what, I like this stock, so I'm just going to stay here regardless of what the technicals say?
To answer that question, I think you need to ask yourself, and maybe you have. I had to ask myself, what kind of trader and investor am I? Am I someone who I'm more interested in identifying like value stocks that I see a ton of promise for a company. I love the company, what they're doing, the management, whatever. Am I more of like a value investor where I'm willing to put my money in it, buy it at a good price, and let it sit? Am I that type of investor or trader, or am I someone that enjoys some more variation with? You could do swing trades. Do I like small caps? Am I strictly an options trader or an intraday trader? And to be honest, that took me a while to figure out. It took me a while to figure out like, who am I as a trader? Um, what do I enjoy and what's my sweet spot? I I'm not a very patient person. I can't stand watching, like seeing like a a stock or a company that I love, that I've invested in, bleed to the death because of an overextended market, which was due for a pullback. To me, is like watching paint dry as a trader. And I realized that actually I identified where my weak spot was, and I had way more like emotional problems with watching something that I had really good like sentiment about and really like the company in the midst of like a big pullback that is actually needed. And I think until I looked at the overall market conditions and actually like valued them for what they were, that's what like clicked in my mind, like, okay, if I can respect what the needs of the market is, and if the need is a retracement that's healthy because perhaps we're due for it, and I can objectively look at that and say, you know what? Yeah, I love this stock. And yeah, do I think it's a good price right now? Absolutely. But this market is going to pull back right now. and I can get that same stock I love for a better price. I'm going to get it on sale. It's going to be Black Friday, like it pretty much was. I mean, it seemed like this was a Black Friday sale, but I think we're still in the midst of it. But I'm looking at it this way now. Like, my mentality's changed about those companies I do love. My mentality is this market's due for a pullback. It is overextended. I do believe that for a number of reasons, not through DD, but through technical analysis, and also looking at history. What has history taught us? And I'm going to go over that using this SPY example. I'm just going to keep running with SPY. I just I tweeted, I think Friday night, that there's a guy at my Bible study that found out I was trading stocks, because I was the new guy at the Bible study, and they're like, what do you do? And I'm like, I trade stocks. Like, oh, like, are you like you work for a company, or you have manage a portfolio? I'm like, no, I'm just an independent trader. And like, oh, so what do you think about the pullback with the SPY? And before you know it, I was like, honestly, and because I already did my TA on it, I was like, honestly, I think this can hit 440s this upcoming week, which was this week. And he was like, no way, you really think so? And I'm like, yeah. And then I had tweeted about it, like, this will be an interesting conversation to have again. And at the end of the Bible study this Saturday, he introduced me to another guy that was in the Bible study I didn't know. And I'm like the youngest guy there, to be honest. Like, I'm 31 years old, and these guys are all significantly older and further along than me. And this guy was asking me about, he found out that I said like SPY to 440 or whatever, and this guy Carl like told him about it, and he's like, so what made you think of that? And I was like, oh, well, it's just technical analysis I did, and honestly, it's really hard to explain unless you are a trader. Are you a trader? And he goes, well, actually, I manage a portfolio of almost 2 billion with the company I'm with. And I'm like, oh my God. Okay. So yeah, it was like a big shocker, because this guy, he's like super humble, like you'd just never guess. And I talked to him about what I was seeing with the overall market, because that's actually where he was more focused on. He wasn't talking to me about individual securities and his interest in that, because he's managing people's money. He was asking me, well, what do I think about SPX? And I said, well, I normally do SPY, but I can take a quick look at it. And I was like, well, if I do the same thing I did with SPY, I think 3,800 on the SPX is around the similar area. And he goes, no kidding. He's like, I just came to that conclusion within like the last week, because I lived through 2015 and 2018, and I lived through 2008, the .com. And he's like, he was just like, so do you think that what happened in 2015 could be happening now? And I was like, well, I'll have to take a look at the charts and stuff. And that's when I went and like took a look at the charts later this weekend. And I said, oh God, guys, I kind of found something. And anyway, I know I just went on a total rabbit hole to your question. I'm sorry. But my point is, I think it's really important we do respect these overall market conditions and what the need of the market is. And it's okay if the need of the market is to go higher, if it is to keep going, okay? But it's also like equally okay to respect the pullback and to not be in denial that, oh, this is just going to end tomorrow. It's like, no, we right now, all of us here, no matter how many years we have behind our belts trading, someday we're going to have a decade of trading behind our belts, and there's going to be other new people. And we're going to be telling them the same thing, like, you got to respect the market. And they're all going to be like, you shill, like, shut the hell up. Like, I love that. But like, I really think, and if you look in my tweet thread, I made a list of things to respect. You got to respect like news catalysts, fundamentals you have to respect. You got to respect technical analysis. You have to respect overall market conditions. There's a few other things in there I put, But at the very bottom, I said, at any given point, any given day, it's your duty to identify what the need of the moment is. So if the need of the moment is to respect or weigh overall market conditions more than those other things on that list, like news catalysts and fundamentals, and look what happened these last 2 weeks. Whatever news catalysts and fundamentals and all this stuff maybe someone had about a company, they went out the window because what was the need of the moment? It was the market conditions. And I think if we can like acknowledge those different aspects as different things we need to like tap into and access or identify as like what the need is, I think that makes us more like well-rounded traders, and investors too. So man, I know that was a long answer to your question, and I gotta work on that, but I hope that answered it for you.
No, it wasn't long at all. And in fact, the depths of it really just kind of solidified my thought on the whole thing of it anyway. I appreciate all of this. And it's, like I said, it's powerful. So if we can empower more people with this idea and this factual look, here is what it is, I think it is powerful for the whole, everybody. Educate yourself, please. So thank you.
Absolutely.
Appreciate it.
Also, I want to add that people actually go to school for this type of education. And if it's going to help you reach your financial freedom, I will highly suggest joining these kind of spaces and give more. Dager is taking his time out from football Sunday to come teach. I'm just trying so hard to help people educate, to help educate people and to help, to highlight the people that gives out so much knowledge that they're doing for free. So.
And to be honest, I really like doing it. And I like doing it because when I actually started trading, this is what I craved. And I found out real quick that like, in most cases I had to pay for it. And so instead I kind of went my own route, and I found everything that I know for free. Like I discovered all that stuff for free. Whether it's through YouTube, Googling stuff, you can find very in-depth articles, and then sometimes just meeting people, getting on spaces, meeting people in real life. This guy I met at my Bible study, you bet I'm going to be talking to him some more, because by the time we ended our conversation, we were both like, you know what? This is looking a lot like 2015 to 2018, and this is why. And actually, I'm going to explain that with SPY here. We're going to zoom out. I'm going to zoom out with you guys. I sent that screenshot to you. That was the first one. I'm going to do another one here.
The one day is up there, Dago.
Did you say it's up there?
Yes, it's up the nest. Yeah.
Awesome. Thanks so much. Okay. That was a good question. Thank you. Thank you, Darth Walt. That's a great name. Love it. What's up, Dorian? Mike? See you guys. New Age. Thanks for tuning in, guys. So what do you think, Lana? Should I keep going with this SPY and what kind of like my thoughts are with like the possible outcomes coming up?
I think you should. I think what it is like when you're tweeting out your TAs, I think it just tells so much. And I think that the fact that you're always on the money, I think you should keep going with SPY. I think SPY is what everyone knows. And pretty much I noticed that you could actually make a living trading options with SPY as well, because the coverage and the straddles, I mean, you could really make a living out of it if people actually know about more, how to do TA and the market conditions as well.
Right.
It's actually more for momentum traders, I believe. But I also don't have patience too, because you know how things can happen within 3 days. News comes out the next day about anything with the market, Evergrande, bond defaulting, things of that. It kind of, whatever it is that's out there, it changes the market conditions so quickly that I can't hold on to a stock for longer than a month or so unless I'm really going long on it. And a lot of people are impatient and they want to make, to gain more capital or liquidity. And, that's
right.
Yeah.
That's right on. I actually just noticed something with the picture that I posted. I'm going to post a different one. So I'm going to delete that one, actually. I'm going to send an updated one.
And shout out to Amina for helping.
Yeah, Amina, thanks so much. I appreciate it. I got to give Amina a follow.
So I'm going to delete this one then. I'll delete this one from the nest.
Just the most recent one you can delete. Yeah. So I'm going to zoom out here. Give me a sec. I've had a lot of people tell me like, dude, enough with like all those indicators. Like that's crazy. And I agree to an extent. Like it can be kind of crazy. But it does work for me. And I'm sure like looking at this stuff at first glance is a little overwhelming. But I think if you take some of the stuff that I'm sharing and you try to incorporate it just little by little in what you're doing, I think it's actually going to click faster than you probably think. It might look crazy and it might look overwhelming, but I'm telling you, like, if I can do this, you can do this 100%. Guys, I started part-time trading like just over a year ago. I had two businesses, and then trading was going so well that in June I just went full-time. So I haven't been doing this very long. So if I can get to whatever this level is I'm at, you guys can too. So hopefully that's encouraging.
I can tell you, JR, A underscore, I forgot how to say it, but I can tell you he follows you to the T, Digger, and he has made tons of money. And he's like, I'm learning so much from Digger, and he's so humble. Awesome. Yeah, he's so humble, and he said this thing works. And now he bought, he subscribed to Unusual Wells, the Flow, and he's doing charting too. And he's like, wow, this can make me so much money. He has so much to take care of, but yeah, you're doing so great. I appreciate you so much, Digger, and you're so humble as well. Keep going.
Well, I appreciate that. JR, if you're on this call, you probably are, but you're a good dude, man. And he's a pretty humble dude too, from what I can tell.
Very.
Let's see here. I'm almost done with this. I'm going to be posting 2 photos together. Yeah, if anyone has any questions in the meantime, feel free to come up, say hi.
My take on the market condition is it's going to be bloody before we see green again, but that's how the market works. Usually when you have a retracement like that, it usually goes back up. Whatever goes up must come down. Whatever goes down must come up. That's the way it is.
I agree with that. I'm just sorry. I'm trying to zoom out here.
And if you stay at the table too long, you're going to lose. So,
right,
the biggest casino out there is the stock market.
Exactly. Let's see. Almost there, guys. This is when I finish what I'm doing right now, which is going to be like a minute or two. It is gonna you're gonna really appreciate it. I just know it. Okay. Wow. That's just unbelievable. Okay. Oh man, I'm so excited to share this. I have not shared this yet. I tweeted about it. I think it was Saturday. And I said I would follow up and stand by. This is the first time I'm going to be sharing the charts I'm seeing. So this is really exciting for me. Oh man. Excited. So I'll be honest, I've never been like super into football. Like I kicked in high school and like made a couple tackles, but I was a hockey player and a soccer player. So
I play badminton. So
you play badminton?
I was I won championship in ninth grade. That was the highlight of my athletic career.
Badass. That's awesome. I actually don't know anybody that has played badminton. So you might be the first person I know that like competed.
That's so funny. No, I just have a good reflection. I mean, a good reflex. So I'm pretty fast. So that's probably why.
Okay. So I just texted, or not texted, I just tweeted this this other thing from SPY 2015 and 2018. This might give you guys a good idea what these possibilities are. Okay. All right. So guys, I'm going to look at SPY currently, okay? And then we'll look at SPY in 2015 to 2018 and we'll talk about what similarities I'm seeing. So, SPY right now, let me get there. Oh my gosh.
Well, those things look identical to each other.
Who's that? Who was talking? Was that the Darth Walt?
No, new age hippie. He's so. I mean, he
There
loves
he
to
is.
learn.
Yeah.
He loves to
What up,
learn.
New Age?
What up? What up?
Glad you could join, man.
Yeah, thanks for hosting the call, man. I appreciate it. What's up, Lana?
Hi.
Thanks for helping set everybody up. You know, with getting all this stuff up. And yes, you're right. I like to learn, so I appreciate it.
Thank you for coming on, for speaking as well.
For sure.
Okay, guys, you ready? Let's start with SPY currently, and I want you to take a look at the chart where I drew the fib from the double bottom up to the first peak, not to the second peak. The pictures are different, but to the first peak. And I'm going to point out a couple things. And what I'm sharing with you about what's happening now did happen in 2015 to 2018. So in 2015, there was basically a few pullbacks, and on the daily chart and stuff, you ended up with a couple double bottoms for the SPY, and it was on the second double bottom that I drew my first fib retrace, right? And it showed like how the pullback was down the road. So what I'm looking at right now, currently with the SPY, with that first fib retrace that went from the double bottom in November of 2020. All right. So I drew it from the second part of that double bottom and drew that all the way up to that, the highest that it went before it did its retrace. And it retraced to about the 23.6% level, which, according to a lot of professionals that do this for a living, not like people like me that became a trader, that is the buy the dip level. That's the 23.6 when you zoom out on these daily charts and weeklies, all that. That's normally where you would expect the dip buy to happen. And the fact that it stayed above the 23.6% fib level was actually very strong. It was a great indication that, okay, SPY is going to go higher, right? It tried to hit that level before, it didn't. Now keep in mind, you're not just using fib levels, you're using support and resistance too, okay? So I'm cross-referencing fib levels with actual support and resistance. That's extremely important. You can't just get by using fib levels. So you see this 23.6% retracement, okay? And boom, it goes back up to 473, right? Well, all I did was I took that the top of that retracement and I redrew it up to the 473.54. And that is now what we are working with. That's what I am working with at this moment. This is what I'm following. And now I want you guys to switch over to the SPY 2015 and 2018 sheets. And what you will see, I'm going to pull this up here too. So let's do that first photo for the SPY 2015 or 2015, 2016 area. So you'll see with the SPY on that first photo that you have two double bottoms that happen. And it's that second double bottom. That's where I began my drawing for the fib. But what you'll see when I drew that from, it looks like 2016 all the way up to that first real big peak in 2018, it pulled back and it fought at that 23.6% fib level. It dipped below it, it recovered off of it, it then double tested it again, it went below it again, it eventually came up out of it, and then the next part was to break above that previous high and run higher, which it did. And it ran to, I think it was like 294. And now this is where I want to contrast like what's happening right now, okay? If you look at these charts from 2015 to 2018, almost the exact same type of behavior is happening on the macro level. We're not talking the daily, like the hourly and the 4-hour chart. We're talking more of like the macro level right now. And so you see it retraced to 23.6. And then when it went up to its second peak, if you look at that second picture, where I drew the fib from that 2016 double bottom all the way up to that second peak, I want you to look at this now. It showed a 50% fib retracement. 50. It blew through the 38.2%. Now, I also think it partially did that because look to the left of the chart at the 38.2%. There's really not much resistance there. So that's why you got to identify those resistance levels, the support and resistance levels. And it broke through that 38.2% and flirted with the 50% and eventually recovered and continued higher. So what I am looking at with the SPY is I'm not making this stuff up. I'm using what we have available in front of us. So when you look at the SPY right now on those other charts, those current charts, all right, look at the one where I'm drawing it up to the current peak at 473. All right, when you pull back, when you look at the 38.2% level, there is a significant amount of fight there. There's a significant amount of support and resistance at that area. That's going to be a real fight at the $415 range, which is 38.2%. However, if history can repeat itself, and if other institutions and like this fund manager I spoke with in my Bible study this weekend, if he is thinking that 2015, 2018 is looking a lot like right now, guess what? He's managing his portfolios of his clients accordingly. So he's not going to mess around with that. He's going to shuffle. He's going to let the dust settle. He's going to wait for stuff to happen. So the dust could settle anywhere. It could settle where it's at right now, for all I know. We are testing previous resistances still, but this is what I'm bringing up on the macro level for the market. I'm utilizing SPY to do that. It works the same way with the SPX, and I'm sure plenty of others, but those are the two that I've looked at But if anyone has, and if you look here too, where I drew it was at a double bottom. I didn't draw it at the bottom where COVID happened back in March of 2020, where it went down to $218. I didn't draw it there. I drew it at the double bottom, just like in 2015 when I drew it there. Because those are real things that like people are looking at on the macro scale when they're looking at SPY. So I don't know what else to talk about regarding this. I think I should just like open up for questions right now. If people have questions about what we just talked about with SPY, and yeah, I think let's just open it up for questions. If anyone's got a question, just send a request. Come up here if you want to say something. Come on up.
I have to add that history does repeat itself. I think someone had asked Zach Morris, and he's a known stock guru, how does he look for plays? And he said, I look at the previous runners. I look at what they did before. I look at the history because history does repeat itself. So that's what it is.
I agree with that too.
Oh, I got a question, Dagger.
Yeah.
I asked you about the chart yesterday. Like, what chart will like tell you like on each time frame? Like, what would you look at each time frame for? Like, do they each tell you like a different story for something? Like, what's going to happen like in a short term or long term?
Well, let me ask you. What do you want to? Let's define what time frame that you are going to be placing a trade or entering or exiting a trade. Do you want to know what's happening like tomorrow? Are you wanting to know what the week might look like? I'm just curious, like, because then I can kind of apply that to what your case is.
Well, mainly probably the next day or the same day.
Yeah. Okay. So, I would use like tomorrow morning when I wake up. I'm not doing a ton of swing trades. I'm really not with this market right now. I'm doing intraday. I'm in and I'm out. I'm using the 1 hour chart, the 4 hour chart, and the daily chart in my pre-market analysis. The 1 hour chart with the indicators that I've listed in that thread, which is also posted above. If you scroll through, it says like master thread. You'll have all my indicators in there. It'll even tell you for pre-market what time frames am I looking at when I'm zooming out overall, like on the macro scale, what time frames am I looking at? And then I forgot what the other one was, but like intraday. If I'm trying to validate like an entry, I might use like the 5 minute, 15 minute, and the hourly to just cross-reference those, make sure I'm comfortable with what's going on. And then that's when I'll like time my entry. And then for exits, I'll use like your 2 minute, your 1 minute, but I also use the 5 minute and stuff. If I'm on a momentum play though, new age, if like, like CFVI right now, that Trump play right now that's happening.
Yeah.
It dipped down to like 10 something and then it bounced and now it ran in aftermarket or after hours. That's a momentum play, like straight up. That thing, I don't know what's going to happen tomorrow and this week, but here's my price target. People always ask like, what's your price target? My price target is historical high RSI and ADX, which is your trend strength on the 1 hour chart. When the momentum trade that I'm in hits those levels, I am normally on the 2 minute or the 5 minute chart, and I'm waiting for that DMI indicator to show just a massive bearish price spread first. Like if I'm just trying to get it down to the wire, right, and just exit at the perfect time, that's what I'm doing. DMI indicator, 2 minute, 5 minute. You can do 1 minute, but I like 2 minute, 5 minute. And I look for the bearish price spread to happen, because what you'll see, like, I'm trying to remember what stock it was. Maybe it was like DATS or something. I was
OTGN.
oh yeah, sorry, OCGN. I was in OCGN and I tweeted to everyone like, "Hey, bearish price spread crossover, like really aggressive crossover." And the thing was just running like mad, right? And you had a great looking chart, right? You could have a bull flag, you could have whatever it is, the nicest, shiniest looking turd you've ever seen, but you don't realize it's a turd, like it's about to knife on you. That's what I call something in a momentum play. Like, don't get caught up like chasing the shiny turd. Like, as long as you know it's a turd, you can play it right. All right, I'm gonna stop saying that word. Okay, DMI indicator, 2 minute, 5 minute. Look for the bearish price spread crossover. It's got to be aggressive, and that's when you exit on a momentum play. For me, now you got to make sure that you're protecting your capital. So as you go, like if I'm doing a momentum play, what's very common for me is if I am 25% up on something, I'm immediately, no matter what, I am taking 30% of my position and taking the profits on 30%. And then the next 25%, I'll do the same thing. I'll take another 30. And I don't care how much it's running, the next 30 or the next 25%, until I have 10% left in my position. And that 10%, I can let that do whatever the heck it wants to do. Hell, it could knife on me, and I'm not paying attention, but I got 10% in there and I've already taken my profits. I'm going to be okay. I can get away with that. What you don't want to do is hold on for dear life 100% of your position. That's just my personal opinion. That's not financial advice, and anyone can play. If you want to do different percentiles, do it. If it's 10%, every 10% you knock out 30% of your position, do it. If it's 5, it don't matter. You can also gauge the momentum play itself. If it's something like DWAC, which was crazy, if you know this thing's like just gonna get absolutely stupid, yeah, maybe you can increase your percentile, right? What's up, Uber Ape? It looks like you got a question.
Oh, you go ahead and finish, man. I'm not in a rush.
It's all good. I'm just filling time right now. So if you do have a question, feel free.
I do want to piggyback on that. What I do is when I do catch those kind of runners, I usually sell by increments on the way down because, like when people are scared of halts, when halts happen, that's a circuit breaker. It has to be done because of that 10%. It's moving above 10% too fast, too quickly. And then people get scared and sell off on that. And that's what causes, like the whole, oh my God, what's going on? But I usually sell by increments. And I notice that once it runs up, if it goes too fast, it's going to come down more quickly than usual. So you want to go ahead and take profits as soon as possible and don't be too greedy, because most of the time the run-ups, you don't know when it's going to run up again. That's why people say slap the ass, because you're trying to use buying pressure to help move it. But that's my advice as well.
Yeah, live to fight another day. Like, there's no shame in like taking profits and missing out on maybe like potential gains. But you definitely are going to feel it when it's the other way around. And that's coming from me. And I've been on both sides of the aisle where I should have taken profits, or I should have had a better game plan, or I got too greedy.
Yeah, it's all about compounding gains. That's all it is.
Mm-hmm. But I'm telling you though, for exits, like your historical high, just pull up a 1 hour chart on any momentum play. Do it this week. Just take a look and follow it. Don't even trade it. Who cares? Find this momentum play, pull up a 1 hour chart, pull up your DMI indicator and all the other indicators that I put on my thread here that I use, because you'll be able to see like what I'm seeing then, right? And follow that momentum play and just look for it. Just look for, oh, wow, like RSI, historically high right now. And you look left on the chart. What is the historical high for this particular stock? Like, is it 70 right at the threshold of, overbought? Is it 80? Is it 90? Like, how has it ran before? Identify that. And then also when you're looking to like enter a position on something too, if you have like a large cap stock that is, you know, I'm just using a large cap right now just because they can be safer than some others out there right now just because of the overall market conditions. But if you have like a chart that's ascending, right, and it's a good chart, it's a solid chart, and you're in the middle of a pullback, right, at this moment, and you're using your hourly and your 4-hour chart, and you're looking at those indicators, and you see things at historical low, like historical low RSI, historical low, um, God, it could be anything. It could be RSI. It could be right,
BMI.
and your indicators are curling up. Maybe your moving averages are curling up. They're about to get ready for the next move. That's a great entry. You get an entry there at a historical low of an indicator on an hourly chart, and you set a stop loss for yourself. You have a better chance in a number of ways for locking it or for a good growth potential because you identified something at a historical low and you didn't
Right.
buy it when it was at like a historical high.
Yeah.
I absolutely will not buy something at a historical high on like an hourly chart. I just won't. I absolutely won't. That's like one of my rules for me because I use the historical high indicators, and like the DMI, for instance, with the price bid. I use that as something to make sure I avoid knives.
Gotcha.
So I would never buy at those levels.
So I do a lot of scalping. So typically I will wait for like the RSI to look like it's, about to curl back up and then watch for the DMI to follow suit as well. Before the ADX start going. So that's what I typically do, but I mainly use like the 5-minute chart to do that. Would it be more beneficial to use the 1-hour chart to do that? Or does it not really, or is it like personal preference?
Well, do you want to go over an example maybe? Like if I went over an example with you?
That's fine.
We could just do SPY again if we want. That was easy because I knew exactly what happened this week. Give me 1 sec. I'm just pulling up stuff. Just keep building off of it. What else?
Uber, you had a question too while Digger setting that up?
Yeah. Go ahead.
Oh yeah, I just want to thank y'all for the hosting the space and everything. The charts that you pointed out were the 2015 to 18. Very interesting stuff, and indicating a short-term bearish market we're looking at here. But with respect to excuse the dogs barking, man, but the Fibonacci levels and stuff that you pointed out on that index, that was a SPY, if I'm not mistaken. Are those levels still valid on, for instance, like the IWM and like the NASDAQ? And are they normally similar or are like more risky per se, like the IWM stocks, like would the Fibonacci retracement be deeper because they're higher risk? Let me know if my question makes sense.
So, let me ask you this first. How often do you use Fibonacci's currently? Do you use them a lot right now with your trading?
I don't. I'm more of a buy and hold investor slash trader right now. But I was just looking at kind of your models and just looking at those, trying to get into it more.
Yeah, no problem. Let me paint a picture real quick with the Fibonacci's, like on the macro scale when you're like zooming out versus like also on like the hourly chart, because at least I use them a little bit differently and I respect different levels differently on those time frames. So zooming out like on your daily and weekly, like we looked at SPY, a normal like buy the dip type pullback is around that 23.6% level I talked about. That's like that's your healthy, like your 23.6, that's ideal that's ideal as far as continued strength, right? And so you'd really see more commonly when you zoom out, like on daily and weekly, from a macro perspective, like the 23.6% and the 38.2% are the levels that I think are more likely. Yes, it can go lower to the 50 and such, but that's just more likely from what I've seen. Now, however, though, when I'm using hourly chart, and I'm not necessarily drawing, those big scaled out fib levels. What I've found more common is anything between the 38.2 and the 61.8%. And how I determine like what levels are even more likely between those three for like a pullback, like a retrace, is based on like how overextended the indicators are that I currently use. And then secondly, what are the moving averages doing on like the hourly or the 4-hour chart? So I'll give you an example right now. If I'm looking at a 1-hour chart and I have the MACD is going to cross under, like do a bearish cross under, my ADX is, my RSI is at an all-time historical high, and it's also not just at a historical high, the duration of its time up there at historical levels has been maybe days, right? It's been kind of long. And then also the stock RSI is way, 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 way up, right? If my indicators are like that high up or that overextended, and also for that period of time, and then secondly, if I have a moving average, if my moving average indicators are doing like a very significant like crossover, cross under. So if in this case, if my moving averages are doing like a death cross, which is like the 21-day moving average crossing under the 200-day moving average. If all those things are happening at once, guess what fib level I'm gonna consider as most likely? I'm gonna consider the 61.8%. That's the one that is the lowest. It's the most, it's the biggest pullback. So if I'm gonna like tweet something about where I think something might head, I'm gonna be conservative maybe and say like, this is extremely overextended, but I think between the 50% and the 61.8%, and at these like particular resistance levels are the things to look for. Now, if the opposite's happening, okay, and my indicators are not overextended, maybe they're like midway, they're kind of meh, right? They're just somewhere in the middle. They're not all really like, they're kind of all over the board. That's when I would kind of consider, all right, maybe this will just be like a little more slight of a dip, like a 23.6 fib retrace or a 38.2%. So that's kind of how I gauge those on like looking at like hourly and 4-hour charts that I use for my intraday, like day-to-day trades. So I don't know if that helps. Did that help?
So on a longer time frame, like the weekly or daily and weekly charts that you're kind of referencing in your previous tweets there.
Yeah.
I guess my question was more so like, a lot of the times do you see the same retracements on different indices since they normally track each other?
Gotcha.
Does that make sense?
Yes. The answer to that is yes. Sorry that I missed that. The answer to that is yes. It is pretty common. I do have in my pinned tweet, I do have a watch list for what I look at in my overall market conditions, like your NASDAQ and all that stuff. But it can be similar, but it isn't the same though. It isn't the same. What you will find though are similarities between certain ones. That's what you will find. And that I encourage you to like create a watch list of your own if you don't have one, and try to identify similarities between different ones, because then you'll know in the back of your head where the correlation lies. Much like how we can correlate individual stocks or sectors with how certain like ETFs move.
Okay, so basically, you can look for confirmation of certain patterns that you see in certain trades or certain, say, just like you may see certain patterns that indicate like a bearish signal, like in blue chips, that you might also see in like big indexes.
Right.
Basically. Okay.
Yep.
Okay. Thank you, man. You're a huge help, man. Keep doing the Lord's work. And
Thank you. I appreciate
AMC
it.
GameStop to the moon.
That's right.
Can we get back
it.
to New Age question? I totally noticed that we skipped his question when he asked too. Thanks for talking, Uber Abe.
What's up, New Age? Sorry for skipping
No, he had a
over your
question and we skipped it. I
I
noticed
think
that I skipped
I
it.
think he was looking for an example, and it's all good. I ain't tripping. I mean, we all share the space together.
Okay.
I think he was trying to pull up an example on a spy about which chart to use for like the DMI and stuff like that for like momentum. I think we was talking about.
I'm trying to remember. I can't recall.
It's okay.
I know I took out the train of thoughts. You were actually in the middle of showing up an example
I think
of
we all.
SPY momentum. Yeah.
I think we all lost the train of thought. It's fine. Once I remember it, I'll ask it again. But one quick question.
Yeah.
I sent you a message yesterday. Well, I tagged you in a message yesterday about there was a link that Unusual Wealth had posted about some Tesla calls in the money. Do you know what that means? Do you remember seeing that?
What price were they, or what strike was it at?
It was like at 300 and something. It was something super low.
I mean, I can't. Let's see. The only thing I can comment on with that, only because it makes sense to me, I can't say that like I know much about it, is that you would buy all those calls, exercise them, and then just sell them. I mean, if they're expecting or do something else with them, I don't know what else they would do with them.
Okay.
I don't know if there's some type of like story behind that or narrative people are trying to push, like, why are all these in the money calls, why did someone buy all these? I don't know. That's a good question.
Okay. I was just curious if there were like purchases or if there was sales or what. I don't really know what it meant, but it's all good. I can try to do a little bit more research and find out.
You know what?
Thank you.
I notice most of the time when they have like huge call options, like way out of the money, that it's mostly the market makers hedging for their loss. And they can change and switch up and sell within a drop of a dime so quickly. Like, you don't even know what they're doing. They're like pretty much fucking with us. I'm just telling you that.
Yeah, I found that out with AMC and the 34 put. Those 34 puts that they had purchased, they definitely made money on those.
Yeah, it's all about psychological. It's all about like fucking with your mind. And they know that we have the same data as them. But most of the time with out of the money calls, they do that just to hedge for their loss, or they're like just fucking with you. And that's why TA comes into play, and it is very important. A lot of people get upset when it doesn't come right, but you have to understand that they control the market more than you think. The system is built for them, by them. That's how it is. Mm-hmm.
Right.
Yeah. Oh, and I just found the post. It said someone's doing large in the money puts up $392 for next year for Tesla. So that is very interesting. I don't know what that's about.
I don't know if you guys saw, but there was like large call options for $632 for GME. I think like 2 weeks ago. And I'm like, what the hell was that about? It was 2 weeks ago. They did $632 call options for GME. So I was like, what the fuck is going on? And I think they were just hedging for their loss, or they were just fucking with us. I mean, that's what I noticed too. Like some things that come in with the flow, if you're not looking at the market condition or what is going on, because new variable changes all the time. So
Right.
I kind of get upset when they get mad at TA guys for saying they got it wrong. No, they didn't, because I did the same thing, and I'm not looking for what other people are saying. I do my own DD, and majority of the time it's right. It's just that new variables come on and new things happen. Sometimes you see something running and they're like, oh, we're going to delist this, and Evergrande just defaulted on bonds. Things like that happens every single day. So things will change as they go on. That's just the way of the market.
Right.
But I have threat level with his hands up too.
Yep, for sure. Thank you.
Hey, Dagger, first and foremost, as always, thank you so much for all the information you're giving us here. I really appreciate it. Do you mind just kind of going in the very beginning of the space call here? You did a real just kind of basic 101 what you look for in DMI. Do you mind covering that again?
Yeah, absolutely. So if you look at any of like the screenshots that were shared at the top, you can reference. There's a couple of them that have the indicator on it. Otherwise, you can just look at your chart as well. But the DMI, all right, the purpose that it's DMI stands for Directional Movement Index. And what I use that indicator for is to identify price spread. Like, what's the price spread doing, and what is the trend strength at that given moment in time? So here's what you want to look for. And I'm going to refer, you can validate this pretty much like from the 5-minute time frame all the way up to your daily. The same, I can use it the same way. So what you want to see, like, let's say that I am looking to enter a position and go long on something. Okay. So there's 3 parts of the DMI. The first part is the ADX. That's the trend strength. The 2 other parts are the price spread, and one part is called DI plus. That's just positive price spread, and then your DI minus, which is your negative. And whichever of the two of the DI plus and DI minus is above the other, that's the one that's in control. So let's say I'm going long. Okay. I'm looking to enter position. When I'm going long to enter position, I am looking at the hourly chart to start for the day. When I'm doing pre-market analysis, and I'm like, okay, I want to make sure I get this. Like, I want to buy something on Black Friday. I want to get a good deal. So I'm not about to buy the top, let it flush, and then have to bag hold it for who knows how long just to recover. So what I'm looking for with the DMI, I want a bullish price spread, which means my DI plus is traversing over the DI minus. All right. And the farther apart, like the greater the spread, the farther apart that these price spreads are, the better. The more confident you can be in your trade and the trajectory of where it's going. The second part of that equation, besides the price spread, is, in my opinion, equally as important, but even more important to understand, actually, and that's the ADX. When the ADX doesn't mean nothing if it's below 25, because 25 is like the magic number for validating a new trend. Okay, so if the ADX is at 70 and it's like coming down, right? If it's coming down, it hasn't bottomed out yet, it hasn't curled up for a new trend, I'm not buying when the ADX is cooling off still. I'm waiting for it to cool off, come down below 25, curl up. I'm looking for my price spread to be, in this case, bullish if I'm going long. And then the moment my price spread, especially on the hourly, I really like using the hourly, and the 30 minutes good too. I think 30-minute you can use for this to be pretty safe with your entry. I want to see the price spread to hit 25 or above, and I want my price spread, in this case, if I'm going long, to be bullish, which means my DI plus is above DI minus. So that's what I'm looking for. All right. So 25 and above for the ADX, the trend strength, means new trend is validated. Okay. It's a new trend that is validated. It is set in stone, and it's just the beginning of it. So watch out. There's more to come. And that's when I like to catch an entry. I want to catch it at the beginning when the trend strength has tons of room to climb. The second thing to know about the ADX in regards to the DMI indicator is 50 plus. So when the ADX hits 50 plus, that is a milestone. It is validating major trend strength, which is rare, and it's a good thing if you're, bullish and it's hitting above 50 plus. It means it can go higher. So the range of the ADX itself goes anywhere from 0 to 100, right? And it needs 25 plus for a new trend to validate new trend. It needs 50 plus to validate a major trend. And it can, historically, it can go up to 70 to 90 if it's really like bullish, right? If you just got major trend strength. And the same goes with if something's bearish, like you have to keep in mind that a bearish trend can also go to those levels at the ADX. And if the ADX breaks 25, it validates that new trend. And if the price spread is bearish, then it's a bearish new trend. And if the ADX breaks 50, then that bearish trend is now validated as a major bearish trend, and it's got room to go down. So, let's see. When the ADX is cooling off from like whatever it's peaked at, I'm normally like waiting for it to either one curl back up to continue the trend, and that'll tell you like, oh, it's gonna make another run based off the current trend it's at, or I'm looking for the ADX to cool off and die off completely and let it reset. I just call it like a reset button, right? I'll let the DMI just reset. So hopefully, was that helpful throughout Level Midnight?
Yeah, absolutely. Actually, yeah, that really straightened me out here. I really, really do appreciate it.
Oh, good. And if it doesn't, if it's still not clicking, just tweet me or message me or something, and I'll try to bring some clarification, because I know like I'm sharing this over Twitter Space. I don't got a screen in front of you guys, and I wanted to do that today on YouTube. It didn't work out. I got to wait 24 hours for them to like activate it,
Oh man,
for
it's
me
all
to
good.
go live.
Yeah,
But
yeah.
in the future, I'm gonna get squared away. So
No worries. Looking forward to it. Thank you so much, man. I really appreciate it.
no problem.
So I see that Metzley wanted to speak a couple of times, and I think they were having connection issues because he keeps on going down to listener and speaker. So yeah, he's speaker again. So if he wants to ask a question, feel free before you get knocked back down again.
Yes, thank you so much. I'm sorry about that. Thank you so much for this again. It's a very quick question, and I'm so sorry if you went over this at the beginning. I missed a few minutes there. I just wanted to figure out if you're using simple moving averages or exponential moving average, and why do you choose one over the other for your personal system? And if it's okay, a second quick question: do you use level 2 data at all during your trading?
That's a good question. Well, actually, both of them. The second one, level 2 data, yes, I do. What's cool though, this is something that's pretty cool. Before I had level 2 data, I wasn't using it. I was using the same system I had. Now I was newer to using it, using my system, my strategy, but I didn't use the level 2 data. I used everything else though, my support and resistance levels, my moving averages, those indicators. So yeah, I use that now. And then that first question was if I use exponential or simple moving averages, and why. So I actually started with exponential moving averages. And as I looked into it and really like cross-referenced my trading style as well, which heavily is dependent on, validating like pivot points, essentially validating a new trend or disproving a new trend. I actually switched to simple moving averages, and the reason is simple moving averages have a smoother trajectory and have, in general, they are less likely to fake you out. Now, it's not that they can't fake you out, okay? They certainly can, but they are, in my opinion, the best to kind of paint the picture for me, because that's what I'm doing at pre-market. I'm painting the picture for my day and what I think individual stocks and the overall market's going to do. So I'm heavily into the simple moving averages for that reason. They're smoother and less likely to disrupt my style of trading and what it relies on. So I'm not saying not to use exponential moving averages. There's really good applications for those. And I actually need to encourage myself to try to identify those applications even more and see if there is a benefit to using them in different trading strategies I have. So
Thank
Okay,
you,
I think we have BNR that wants to talk. I think he has a question.
yeah.
Yeah, I'm going back to New Age's question about your SPY example. I wrote it down. You were looking at the relationship of ADX and RSI on the 60-minute or whatever, historical highs, historical lows, to illustrate that. That's what your SPY example is going to be.
I'm sorry. Could you clarify what your question is? Are you
So
asking if?
no, New Age earlier was when you were looking up when you were going to pull up SPY as an example to illustrate something. What you wanted to illustrate was the relationship of ADX and RSI historical levels on the 60-minute for your levels or entries, exits.
Oh
That's
yeah,
kind
because we were talking about
of
momentum plays, right? And like the
right.
exit. I got you. Okay, now I'm following. That's a
Okay,
good
Thank
question.
you.
you got
So
it.
yeah, the historical highs, right? That's what I'm pulling up on, and keep in mind the ADX indicator, you guys, is its own indicator. You can use it alone as itself, but if you want to use it in conjunction with the price spread indicator that I'm using, then just use the DMI, because it gives you all of it. It gives you the ADX and it also gives you the price spread. So yeah, what I'm looking at, like tomorrow morning, okay, like right now on the hourly for the SPY, I got the stock RSI, the RSI, the DMI, the MACD, my moving averages up. And what I'm going to pay attention to in the morning is where, like right now, the stock RSI is kind of like mid-range. So it has room to make a move up, it has room to make a move down, and I'm just going to watch it in the morning. What does the stock RSI do? If the stock RSI goes up and breaks above those, historical high levels, and it's at those levels, guess what I'm gonna think about tomorrow? I'm gonna think, oh, stock RSI is telling me there's more room for a move down. And regardless of like what the RSI is at open tomorrow. The other thing I'm looking at is also the RSI. Like if the RSI is at a historical low level or a historical high level, the one thing that I like try to hold myself accountable when I'm like looking at historical high levels for like RSI or ADX, I'm always paying attention to what are the moving averages telling me, but then also stock RSI. So like if my stock RSI is very high, but my RSI is like, let's say it's like 35 even, right? It's like, oh wow, that's really low. But my stock RSI is high. And then maybe my other indicators are saying, you know, anything could really happen in the morning. What I'm paying attention to at that point, I'm like, yeah, my RSI is 35 and it seems like a great entry, but the stock RSI is telling me and screaming at me that like, yeah, there's room for a move down still. So you can at least buy the dip, if you think it's going to be bullish, and it's going to continue up. So that's why, I can use historical highs to identify entry points and exit points like that. But I'm also looking at things like the stock RSI and the moving averages to kind of confirm that, or even like disprove it. I actually love disproving my own like theories like as I go, and then tweet about it or share about it, because what I'm doing is like holding myself accountable. Whether I tweeted about it or not, if I'm identifying it and I'm like saying, oh, that just disproved my theory because this is doing this now, and that completely disproves this. Like I mentioned earlier during a momentum play, if everything is just running, right, and I got no red flags from my indicators, but then I'm seeing like a big crossover on the price spread with the DMI, I have to like humble myself in the midst of whatever the hype is and the momentum and be like, yo, it's time to acknowledge like this might be a big knife coming up. I might need to like start scaling out or scale out something. I hope that answered your question, because I don't like to like I don't like to just say, oh, you know what? I'm at a historical low for my RSI, and I'm at historical low for this or historical high for this, and just say, yep, I'm going to hit the buy button and I should be good, because I need to use these other things available to me to confirm that or validate it or disprove it. Let's see, I got a request right now. Oh, it's Lana. Lana, did you request something? Hold on. Can you guys hear me still?
I can hear you. Maybe she's stuck as a co-host. That happens sometimes.
Stuck as a co-host?
Yeah, she needs to leave and come back.
Should I boot her?
Yeah,
Maybe.
send request again. Yeah,
Well,
so basically take her off co-host and then send an invite
she
again.
just declined co-host, and I think she's back.
Yeah.
Let's see. Real quick, BNR, did that answer your question? I'm sorry if that was roundabout or if it was.
No, you're good. I was just reminding you of that, and I was interested in it, so I jotted it down.
Let's see. All right. Okay, Lana can speak.
My connection kicked me out. I'm sorry about that. That's why.
Oh, that's all good. I'm gonna send you a co-host invite here. Cool. There we go.
That happens a lot, Lana. It's very annoying. You're stuck. You can't do anything.
No wonder. I was like, what happened?
Yeah, and
Where'd she
everybody's
go?
on mute, and you're like, "Am I going crazy here?" But you're stuck as a co-host.
What's up, Kobe? Thanks for joining. You got a question?
Thanks a lot, bro. Yeah, I want to say hi to you and Lana. I'm an NFT photographer, but I like bounce around in different spaces. I am into the stock market and trading. And I wanted to see, you got a lot of people up in here. I wanted to see if you can talk about some of the nitty gritty details on technical analysis. Because this applies to stock day traders as well as you option traders. I use options to hedge against my positions. That's what I primarily use it for. But can you talk about some of the technical aspects, some of the technical analysis aspects, like what trend lines are you using? Obviously, we all use the common ones, but I wanted to see if you can go into detail a little bit about that as a day trader too, if you don't mind.
So I'm gonna ask you to try to narrow down what you want to know. I know that when we start, I know you probably just hopped on. Do you just hop on right now?
Yeah, well, I've been on about 5-10 minutes. Yeah, I've been,
Gotcha.
kind of
So
listening.
I have, if you look at the thread up top, I posted a thread of like all the trading strategies, tools, resources, and it has a list of all like the indicators I use and everything. I have it pretty detailed. I would encourage you to take a look at that. But as far as do you want to know specifically like for day trading, like what I'm using, when I'm applying it?
Right, like there's different patterns that we all use. So I was just curious on what
Yeah.
you like, what tools you like in your arsenal for when you're watching this minute by minute. Or, and I think you said earlier, I don't think I don't know if you watch it minute, for a minute. But yeah, just in a general sense for people who, because there may be people in the audience who have no idea what aspects of technical analysis we're even talking about. So,
Gotcha.
so yeah, just in general.
Yeah. So, good question, Kobe. Guys, when I start my day in the morning and I'm looking to do like intraday trades, right? Or I'm trying to get a pulse. I'm trying to get a pulse on the overall market conditions first, right? I make my watch lists for individual stocks. I take a look at like sentiment around really popular ones, maybe on Twitter and stuff. But this is what I do in the morning. I Market opens for me at 9:30 a.m. I'm Eastern time. By 8 a.m., I am done with everything to do in the morning, breakfast, you name it, and I'm ready to go. And at 8 a.m., the first thing I'm doing is I'm opening up news. So I'm looking at like Yahoo Finance. I use a thing called StockTitan.net. And they actually have a Discord where you can set up alerts to your Discord as new news is announced.
Wait, really?
Yep.
I didn't
yeah.
fucking know that. I use them too. I
It's
didn't know they had a Discord.
it's free. Hey, if you check the thread I have at the top, I listed all the links. Um,
Oh, I
and
got you.
so
I see him. Okay, I got you. I didn't know that. What?
yeah, it's awesome. I was doing it geezer style on the website and just refreshing it, and I'm like I'm doing something totally wrong now. Like, and so I found they had a Discord that literally simultaneously live updates, and I have my alerts on. So by 8 a.m., which is an hour and a half before market open, I'm looking at I got Stock Titan up in my Discord. My alerts are going. I'm looking at I'm also using a website called docoh.com. That's DOCOH.com. That's also in the thread above if you need a link. That is an awesome resource. Specifically to manage, or not manage, but to follow like brand new SEC filings, individual companies you're following. If you want if someone's mentioning a ticker on Twitter and you have no idea about it, you might not have the time to just start like looking through all these resources. Go to doco.com. Find the ticker. It's going to have everything you need. Seriously, it's my favorite. If I want a snapshot of something, that's it. So hour and a half before open, I'm looking at news. By 8:30, that's when the majority of like a lot of news is released. That's what I find. 8:30 is just like you get pounded with news alerts. So between 8 and 8:30, I'm looking at news already, and I'm starting my technical analysis for the day. I'm painting my picture. So I'm using the 1 hour chart and like the 4 hour chart and the daily chart to look at what is the SPY doing and the overall market conditions, right? Which I have in that thread a watch list of overall market conditions that I personally monitor in the morning and during the day. Okay. So if I'm trying to see like what's the market doing, I have that watch list in that thread above. And I'm looking at hourly, 4 hour, and daily for that. The hourly is my sweet spot. That for me, I've found is the most accurate way for me to paint the picture for that immediate day. Okay. So like if I want to know what's going to happen at open, if I'm going to tweet like, hey guys, it's probably going to pop at open and then it's going to just completely flush the rest of the day. And people are like, yeah, right. This guy doesn't know anything. He's just pulling that out of his butt. Like, no, I'm telling you that because I've learned how to actually use those indicators I have, apply it to the 1 hour chart, and it's been working for me. I mean, for those of you that follow me, I know you guys have seen it. I'll say like, hey, this is gonna pop this morning. Like, yeah, this stock right now says that it's bearish on this hourly chart. It says it's going down. However, like this happened with SPY last week. I'm like, hey guys, if you look back through my tweets, you'll find a bunch of SPY tweets, and you'll find me paint one. I did like two green logos that basically mean like good, and I'm like, hey, this is what SPY is doing. And I basically said, yeah, it looks like SPY is ready to, get cranked again, like just, flush or go down. But the stock RSI is at an all-time low and it's got tons of room for a move up. And then I said, my guess at open is it will pop. And by the way, I think it's going to pop to this moving average. It's going to pop up to and test this 21-day moving average. If it breaks through that, it's got to hit this. The next stop is maybe this moving average around this previous daily resistance level. And if it holds that and breaks through that, then we might actually see a SPY reversal. If it doesn't, the other indicators that I have right now are telling me this thing's just going to like go down the tank. So I'm like painting a picture, and I'm saying these are the outcomes that I can see happening. And what happened at open? SPY popped up and it tested like right on Friday. SPY popped, and actually Wednesday was the same thing, and I called the same thing. I said, hey, SPY's got room to pop up at open, and it's going to test maybe like the 100-day moving average. And if it breaks through that and holds above that, then this is the next resistance level it has. So that's what I'm doing to prepare myself for like overall market conditions in the morning. So I'm essentially, to simplify it, I'm using my moving averages, my 10, 21, 50, 100, and 200. And I have that in the thread posted above if you want to reference it. And then I have my MACD up, I have my DMI up, my stock RSI and my RSI up. Okay. And then I'm also zooming out a little bit. And if I see that we're in the middle of like a retrace or a pullback, I just start looking at the chart and I start drawing some fib retraces and start seeing like, okay, what are some levels to acknowledge? Because fib retraces more than anything are more psychological than I think they are concrete, because they're just used by everybody. And being that the derivatives market is the biggest it's ever been in history, since like 2011, 2012, when it all started, you have algos that were built by machine learning to identify things like that and to utilize things like psych levels at fib retracements and fib extensions But also, like, the real thing is support and resistance. That's the real bread and butter you have to respect. But if you combine all these things, if you combine, hey, where's the moving average at? It's got to break above that. If you say, then after that, the next resistance level is this. And then if you say, oh, by the way, like, if this is a retracement level, you got to acknowledge that. So it's kind of like you do it in layers. And yeah, so support resistance, when I'm looking at like scalping during the day, I really use the 1 hour to paint the picture, but then I go down to the 15 minute, I go down to the 5 minute. I cross reference. I'm like, what am I seeing here? Like short term. Like, okay, 1 hour is saying this, 15 minute, 5 minute is saying this, and maybe I'm ready for an entry. So
So, Dager, I have a question on in DMs for you.
yeah, what's up?
Okay, so I have one. I won't highlight who said it. They wanted to ask, what are your thoughts on the meme stocks? We are all seeing an inverse relationship with meme stocks, and every time Bitcoin dumps, meme stocks diverge. Bitmark reported a 100 plus million crypto hack yesterday. I'm sure this is all coincidence, but just wanted to get his thoughts and opinions on that.
Ooh, oh, this will be good. So I'm gonna retweet something so you can pull it up here, because I tweeted this, gosh, months ago, I think, about the inverse relationship with Bitcoin, and I specifically used GME. Give me a second here, Lana. I'm gonna retweet it. That way people can like look at it. Yep, here it is. All right, I'm gonna. Let's see. All right, I think I just retweeted it now. Yeah, and you can put it up there. Or Amina.
Yeah.
Amina, again, thank you
Yeah,
for
don't worry,
everything
it's
you're
okay.
doing, and Lana, same to you.
She's so
You guys are
awesome. Amina is so awesome. I love her so much.
Thank you, gorgeous. I want to read this as well. This should be interesting. It's an interesting question, I have to say. There is definitely a correlation in my personal view.
Yeah, me too. I'm excited for this answer.
I was wondering if anyone was following those tweets I had about the GME correlation. I'll be honest, I just used GME as the example because that was just all I had time to cross-reference. So you guys,
No,
I
we get it.
encourage you to try to cross-reference the dates of like some of these movements and see like if anything lines up with like AMC or anything else. So I actually, gosh, I brought this up like this was before I even posted anything really on Twitter about like trading ideas. This was, I mean, I maybe had like 50 followers or something, and I was really new to Twitter, and I just one day was like, huh, well, look at this look at the correlation with this. When Bitcoin did like a major retracement, like a major pullback, from like 57K to 44K, that's when I, almost tripled my money in GME to 348 because I was in GME at the time. And I was like, huh. And then I was like, oh, it also looks like it happened again. Bitcoin did its retracement from, and this was even bigger. I mean, this was from 59K to 29K. And GME began its run to 344. And it is to the date, you guys. It's to the date. So the day that Bitcoin started to fall from 57K to 44K on February 20th of 2021 was the same date that GameStop began its run up to 348. And what's interesting is where GameStop peaked at 348. it was also the pivot point for Bitcoin. So when GME went down, Bitcoin started going up. And the same thing happened in May, beginning May 12th, 2021. The pullback from 59K for Bitcoin to 29K. GME began its run to 344. I mean, it was very obvious to me that there is definitely a correlation. Now, what it is, what the reason is for that, what are the big question is like, what do we know concretely that institutions or funds use Bitcoin for? Do they use it to hedge? Do they, are they using it to, diversify as, maybe the overall market pulls back and Bitcoin goes crazy, or vice versa? It's whatever. What is their strategy? Those are kind of like my questions about it. And I don't have a lot of answers concretely. Now, interestingly, that guy I met at the Bible study, he is a fund manager. I don't know him at all. I've met him once, and I'm sure I'm going to talk to him again. I might ask him some questions about just like correlations and his opinions on that stuff. And if I hear about it, I'll share more. I see Darth Walt. You got a question?
Actually, it was more of a statement, and I'm really glad that you went and put that up there. I see patterns more easily. It's just how my brain works, and being able to now look into and taking your technical analysis and being able to say, okay, here's a pattern that I identify. I don't know why I identify it. It's just there. And then to be able to go and place these technical analysis and say, okay, there is a direct correlation here. When this happens, when this starts to pattern, this starts to pattern as well. And then here's the technical analysis for it. I'm not just thinking this in my brain and looking at it from just like, ooh, pretty pictures type of, you know what I mean?
Right. So question, I'm curious. I'm like the worst at following others on Twitter. I'll be honest. I'm like really bad at following like people's posts and stuff, because I'm very much focused on pretty much the trading I'm doing and then posting it, sharing it. And I am curious what I am curious like what other people have talked about with this inverse correlation. Lana or anyone here, if you've already heard something like this, or if people have identified certain things already.
Well, my take on that is with Bitcoin or all cryptos, when you see a very huge move like that, retailers can't do that. That's institutional. That's all institution. So I do feel like it is a liquidity thing. And I do feel like in order to pay us, they do have to take money from other people in order to pay us. So I think it is a very fair assessment that I have. If I was a hedge fund, I would be doing the same thing. So I think like the hedge fund. I know that tax season, to cut down the 40% taxes coming around. So I feel like there is going to be some major move within the next week or two. It could be bloody this coming week, but I think fair assessment should be the next 2 weeks. I do see something happening, and I'm going to stand by that. I'm going to be firm with that.
I think that's a fair assessment, actually. Again, this is like not a new thing to see. Crypto do what it's doing right now, and then following that, you have just a bunch of rallies happen that everyone's like, "Oh my God, it's happening!" It's like Groundhog's Day right now, and I just feel like I wouldn't be shocked if it happened again and we had a rally.
Yeah, Joshua is also in this call too, and I think he's in line with what you're saying about Bitcoin having a lot to do with the with GME running as well. So, Josh, do you want to piggyback on that as well?
I just joined in. I didn't really hear what was going on. I apologize.
So the question we had was what he was answering was that what are your thoughts on the meme stocks? And we are seeing an inverse relationship with meme stocks. And every time Bitcoin dumps, meme stocks diverge. Bitmark reported a 100 million crypto hack yesterday, and just wanted to see your thoughts and opinion. And we were just covering that whenever Bitcoin dumps, GME runs, like meme stocks runs.
Oh yeah. I've been preaching that for a long time. Just because BTX, BitMEX can be utilized essentially by institutions for 100x leverage. So I think crypto is just a huge leveraging tool that they use to make money with crypto and then bring it back to the markets and use that in the options chain. Every single time a meme stock has gotten shorted all the way down to where IV is its lowest, you'll see crypto always dump huge amounts. What was it? I think it was like 15% on Saturday or Friday. We saw the same thing in June, kind of. I think it was like a 9% dump. It wasn't as extreme. And the last time we saw something this extreme was January. So they definitely tap into crypto, utilize, take out whatever leverage they have on that. That's when we see these huge dumps. They'll go into the market, they'll let things go long, and they'll reallocate their positions based off of that. But yeah, 100%. I don't know if we'll necessarily see it on Monday. I think we'll see it maybe later in the week, like Wednesday, Thursday, if anything is going to happen. And that times up perfectly with GameStop's earnings report, which I think is the 8th. And someone can correct me if I'm wrong.
It is.
Yeah, exactly. So I think things are lining up really, really, really nicely. But we'll see. I try to stay very, very even keel because you never know. But things do look pretty good.
Thank you for that, Josh.
Hey, Josh, I appreciate you hopping on here. I was curious if you or anyone else, I haven't really looked at this type of correlation, but has crypto, when it's pulled back like it is, right now, and like it did in May and it did in February, has anyone noticed, does crypto pull back following a pullback in the overall market? Like, does a crypto pullback generally lag a little bit after a market pullback? That is a correlation I haven't checked into yet, but I just wanted to raise the question in case anyone has already looked at it.
Yeah, I have. It does whenever SPX goes down, or the indices. So you'll take a look at NASDAQ, S&P 500, and you can always see these through the, firsthand through SPY or QQQ. Even looking at the VIX right now,
Sure.
You'll typically see a latency period before crypto ends up going. And my assumption, it is either margin calls or they're trying to get ahead and be proactive on margin calls. And people think when I say margin call, that's the MOAS. That doesn't mean that necessarily. I get messages like that all the time.
Sure.
Margin calls happen all the time. They're not always a bad thing. It's just they're over leveraged. So I think that you do have that propagation period before they end up liquidating crypto. They have risk calculators all the time telling them what to do and what if they're over leveraged or what kind of risk they need to do to mitigate damage. And I think we see that latency period all the time, and then crypto dump after.
Another thing I just thought about too, as a very real possibility, right? When markets pull back like this, like if I'm like a fund manager, which Josh, I know you just jumped on, but it was kind of funny because I was at a Bible study this weekend, the previous weekend, and people were like talking about stocks, and they found out I traded. And anyway, they had asked like what I thought about what's going to happen this past week. And I ended up meeting a guy at that Bible study that is a fund manager. And, he was talking about, he had some very interesting points regarding like just some similarities between the 2015 double bottom, like for instance on the SPY, like the 2015 double bottom, and then it ran up to its run up in 2018, and then it pulled back, almost like a 50% retracement. And one thing that I do think is a possibility, especially if like a crypto sell-off is like lagging, behind an actual like market pullback. One other opportunity is if fund managers, institutions have investments in crypto, and they know that they can accessorize that during a market pullback to reinvest, or actually just have cash on hand to reinvest back into the rest of the market. That is another angle, I guess, I thought of regarding this. Like, hey, the market's pulling back. Here's a time to cash out somewhat in our crypto wallet or whatever and reinvest during the market pullback. So I think that is one possibility. I don't know what you guys think about that. I do agree though with the margin call stuff too. I think that's another thing. But doesn't that make sense to you at least? I mean, to me that seems really practical to sell off crypto if it's like lagging behind a market pullback.
Yeah, but that's the thing. It's almost like a hedge, right? So when the market does correct, typically, or what we've seen over the past 20 years, where do people go? They go to gold, they go to certain futures as a hedge.
Right.
And I think normal people treat Bitcoin and crypto as a hedge. And you got to remember, these guys have their positions, and they've had their positions with the 100x leverage for a long time. So they want that lag almost. So people will see, oh shit, the market's bleeding. I got to get out really quickly. They'll go to the hedge, what they believe is Bitcoin. They'll let Bitcoin rise up. And that's that latency period. I think they're letting people hedge against the market corrections through crypto, and then they'll sell off and dump. They'll go into the market, they'll cover what they need to cover and keep all these leveraged stocks that they have, artificially pumped stocks, should I say, too. And they'll try to bring them back to equilibrium, and they'll go back into the crypto and they'll buy the dip and push it back up.
Huh. That is
Thank you for that assessment, Josh.
Yeah, I appreciate that. Some good questions, actually, guys.
Josh P just came up as speaker. Do you have questions too? And also the dark, I forgot the dark wall. He has his hands up as well.
The dark wall.
Yeah. Thanks for coming on here, speaker Josh.
Yeah. I'll probably just chill for 5 more minutes. I'm getting ready for the gym, but I'll listen, kind of chime in before I leave.
Okay, thank you.
Cool.
Yeah, sorry, I'm driving. I don't know if you guys can hear me. I'm driving. I wasn't in the car when I requested to speak, but if you can hear me, great. If not, I'll just listen.
We can hear you. We're trying to work it out. Go ahead.
Okay. I'm new to the market, but I totally agree with what Josh was saying. Like, it seems like when they get over leveraged in the market and they got to start to cover, they're pulling from crypto to go ahead and cover that. And at the same time, when the market's coming down, they're pulling that liquidity from crypto to go ahead and buy that market up. And then once they cover their position over there and pump that back up, they take that profit back over to crypto and buy that back up because it's down. I mean, I know that's in layman's terms, but just from a new person looking at this and just using my real world experience and other things, it seems to me that's the pattern I've seen since, January, February. So that's all. I'm glad somebody had mentioned that because I was seeing it, but I don't really understand how to explain it. And the way he explained it makes a lot of sense.
Well, I mean, as a business analyst, I can tell you if it doesn't make sense to me, it's not right, and that makes sense to me, so I think that's right.
I appreciate your time. I'm going to keep listening. I'm on the parkway now, so I don't want to distract myself. But I appreciate what you guys do.
Thanks for tuning in, Josh.
Yeah, of course. And just to touch on what he said too, like the perfect scenario for a market maker is a highly liquid market, and then something that's always going to have permanent buyers and permanent sellers, right? And the perfect example is the apes versus the hedge funds in AMC and GameStop. It's highly liquid. They're starting to lose their liquidity though, because the spread is starting to diminish. I don't know if you guys see me talking about that. You guys can go through my tweet. I don't really want to talk about it now because it's kind of deep to get into. But when you look at crypto, though, you have perma bears and perma bulls. You have people that think that crypto is the future, which it is. And people are always going to buy the dip no matter what. Those guys aren't scared of the dip. They're not scared of red. So they're always buying the dip. And then you have people always selling at the top, or short selling the top, I guess you could say. And that's like beautiful for these guys because they can get out of their positions, dump huge amounts, and always get back in and kind of let retail do the rest of the bidding, and push it up once they get their positions reacclimated. And that's what you see with Tesla too. That's why Tesla is so high, because as it gets pushed up, new short sellers then get gamma squeezed, and it pushes the heights of the stock up even higher. That's what's going to happen to GameStop and AMC. We saw it a little bit with the $70 move, and then we saw it with GameStop with the 300. And we're seeing it over and over again. And it's just market makers taking advantage of leverage and permanent buyers and permanent sellers.
Thank you for that, Josh.
Yeah, I think I'm gonna go on your profile and try to read some of those tweets you mentioned. I think that would be worth looking into.
Yeah, he's really good at TA too and analysis. I mean, I read all his stuff, and me and him actually spoken DMs about our own TAs and stuff. Like, we bounce things back and forth. I can tell you Joshua is extremely intelligent and he knows his shit. Just like you, Digger. And that's why I always talk about you, because you're so humble, and I just want people to know more about you, because people are out here really trying to teach people and try to spread knowledge. And, they always get lost in the shuffles. I don't know why, but I'm like, every day I'm just trying to promote people that I know comes from a good place and is highly intelligent. And I know everyone out here is just really on Twitter just trying to learn about the market. I think that's majority of people anyways. That's why I'm on here. I try to do my DD and just verify it with someone else's DD. And then if it lines up with mine, I know that we're on the same page. And that's how I, choose my plays and build my watch list around. Also sympathy plays as well too. But I also like LCID. I know that is a sympathy play to Tesla, because EV stock went up because the infrastructure bill has been passed, and we all know how Nancy does that. So I look at the whole condition.
Nancy.
Right? Do you do the same thing, right, Amina? I mean, I can't help it. I mean, sometimes you just want to learn and you just know how things go, and you already know how the market maker is working, and you have to think like the hedge funds. Like, I totally think like them. When things happen, it's almost to the point where it's obvious to me now. Like, wow, that's so obvious. And I see great guys like Joshua, Dager, and Stock Talk, everyone else doing such great TA. So I don't post mine out there because I don't want to get challenged, because I'm not that smart at it yet. I'm just learning. So I sit back and watch things as I go, and I always read people's tweets, and I was like, wow, like
Twitter can be ruthless.
It is. So I just try
as a new person on Twitter. Oh man. Anyway, I really appreciate what you said, Lana, and I think you've connected the community in so many ways. I know for me, I got on Twitter because I kind of needed an outlet to just share these ideas.
Exactly.
Because really nobody around me I could really relate to on a lot of levels with this. So that's when I was like, I'm going to see like what Twitter has to offer. I never had a Twitter up until this year. So
yeah, I saw Dager.
And the fact that there's like Twitter Spaces.
I saw Dager when he had 500 followers on his account. I don't think he was searching clout or anything, but I saw him because I was also in BBIG, and his TA was like, whoa. And everyone, I caught that. I took a big hit on that as well, and I'm still in there, just trying to wait. But then I hedged my loss as well too. But I saw him and I was like, wow, people need to know about him, because my TA was to the T with his. Like, I was just learning so much from him, and I just kept on trying to get people to look at, that the TA guys, that people out here to educate. And Joshua too. Like, I know it's such a hard place to be who you are when you want to give the truth, the bearish and the bullish news. And it's the stock market. You're going to have red days and green days. And when I see them having the balls to post that out, and they get so much, shit for it, I'm like, oh my God, no, not everyone's a show, but just let them teach you. Come on, guys. Like, that's why I was like, oh, I'm going to stay away from that, but I'll back it up and promote it as much as possible, because I'm not scared, because it's Twitter. But I'm like, wow, you guys, like, it's so hard for like new people to want to say what they want to say. And I'd rather hear the truth when I'm going in and buying a stock or the product or anything. I want to know the good and the bad and ins and out. I mean, that's just who I am, and I'm open for new information to know, because as I've seen, the market changes all the time. Just like the runner with pun, they saw Duwop flew up, and I was like, nope, that's a setup because you already know what's going to happen. And I called it out. And Mark, too, I said, call it out, don't, because now there's too much light being shed to that ticker because of what happened with Duwop. Don't do it. And then the next day, some people was like, God, thank God you posted that out. Like, you have to know how they think. They just lost some. You have to know how they think. So, yeah. Hey, Cheddar, go ahead. And the Dark Wall, too. You guys have your name.
Hi, Lana. I just, I've been down here listening the entire time, but you said something that resonated with me very deeply when you said you don't post TA and why. I absolutely love Joshua. I will say it for what it is. He has been there for me since the beginning. And I would DM him and stuff like that, and we would talk, and he would always say, Chetta, you're so smart, like, put your DA out there, blah, blah, blah. And I know you can hear me down there, bro. But I wouldn't for the reasons you just said. Like, I'm not here for clout. I'm here to learn. And I don't care how long you've been in the market, there's always room to learn. And I don't want to have anybody come down on me because, like, at the end of the day, you only really make like 3 out of 5 choices right. And that's still good. But people only focus on the 2 that you did wrong. So, like, I don't want to do that. I know, like, I see the market a different way than a lot of people, to the point where when I first got here, I felt crazy. And I was like, yo, something's wrong with me. Like, why am I seeing the world economics like this? And why does this add up to this and this add up to that? And this ain't making sense. And then I started reaching out and talking to people that I trust, like Joshua and Optimus and other people. And it made me realize that, like, I'm not dumb. And, I just really want to give the guys that lifted women a shout out. So anytime he's in a room, like, I feel the need to come up and be like, thank you so much, because, guys like that, like, you need to hear it, you need to hear that. So thank you, Joshua. But I want to step back down.
Thanks, Jetta.
Oh, you're welcome, Lena. I love you.
Love you too, boo. So yeah, I mean, the whole thing with everyone going against the TA guys, I feel like I get upset about that, because I feel like, when people take their day and time out to actually do what they do and tweet it out and spread knowledge, and they want to spread the truth, it does upset me just a little bit, because I feel like it's Twitter. That's why it stops a lot of people from sharing their knowledge, because they don't want to, get attacked by the masses. And I'm all for, the little guys and highlighting people, because I look for people that's very humble, look for people that is spreading the truth, and there's really no clout chasing around them, and they still aren't doing to this day. So I appreciate what they do. And like I said, I'm still learning, and some people are a bit misunderstanding how the market works, because I'm in finance. I came from North Carolina. That's number 2 in the country of the finance state. And I have 20 years under my belt as a business intelligence, doing everything, working at Bank of America and Wells Fargo. I can tell you, even going to school and all of that, I still don't know everything about finance. That's why you have 4-year college or even continuation college, just to keep going. So for anyone to come on Twitter to just retweet for 10 months and think you know everything, I feel like that already is spreading FUD. And you shouldn't do that, because some people do follow you and take whatever you say or your opinion at heart. And so at one point I started, pulling up bangers, and I was hitting bangers 3 out of 4. And it was just that day. I was like, it's going to run up today. And then I stopped doing that because I saw one of my stuff didn't go right. And I felt responsible, but I was really trying to share. So I took a step back and just sharing my DMs down and going to my Discord. And then I let people know that we're just trying to spread knowledge. And I always tell people sometimes I get it wrong, and I make people a lot of money, but I was like, sometimes I'm wrong too. And, that's the way it is. So if you are not going to be upset about it, then you can follow me. But if you're going to be upset about it, please don't follow me, because I'm not trying to make anyone lose money. I gain nothing from it, So that's why I took a step back from that. And even though I feel like I'm knowledgeable, I'm just not as big-headed as, some other people, and feel like I know it all, because there's so much more to learn, and you're not going to learn everything within 10 months on Twitter. That's why I respect the people that does know more and want to spread their knowledge, because it's extensive. This is money. It's going to be extensive, and that's what people need to understand about. It's not a little kid's game where we're just sitting around playing with Monopoly money. This is real money.
Lana, I think humility is one of the biggest character traits that you could build and have as a trader. Humility has saved me money. It's made me money. It's kept me objective. It's prevented me from trying to push, a specific narrative that, somewhat helps me. I know over 99% of all my trades I make every single day, I don't share. I don't share them. I'm responsible for my own trading outcomes, but a lot of the things I do TA on, I either don't have a position in, or I'm doing because I have followers that are trying to apply what I already know to something they're looking at. And because I actually enjoy sharing what I have learned, because for me, like, the best thing is when something clicks for me and I'm like, oh my God, like I can read this market right now like a map. That's the like best thing to experience. The second best thing that I experience is when I see someone else get something, when someone else has something click. Like seeing someone else or getting feedback from someone that, yo, Dagger, like that thing you talked about last week with that indicator, that's been game changing for me. I had this guy, I follow him. His name is Woo. I think it's Woo Trade Clan. And he had posted something about using the DMI indicator on a put position he had. And he exited his position right when the price spread did like an aggressive crossover, and it bounced and it ran higher. I forgot what trade it was, but I know he's been around Twitter probably maybe longer than I have, but he applied a new tool that maybe he hasn't used, and I'm going to apply tools I've never used. And I think if you can always come from the mindset that, like, I got to learn more, I need to learn more, I'm hungry to learn more, and you just stay humble, and try to stay as objective as you can about this market, you're going to set yourself up for success. What I don't think is helpful to us, like, individually, is to be like a perma bull or a perma bear, and then cut others down for not being the same as you. I mean, that's like having a faith, like, in whatever your religion or faith is, and then anyone who falls short of whatever you believe, you treat different. And it's like, no, don't treat people differently than you, or that live differently than you. Like, if someone is super bearish all the time or super bullish all the time, like, let them do that. But in this market right now, the people who are going to, like, keep their capital and save it are the people who are willing to look at the market as it is and for what it is, and to try to seek more knowledge, really. Because, like, before I was a trader, I was pretty much like a perma bull. Like, all I wanted was something that was going to run. Like, I didn't believe, I always thought, oh, the market's just going to keep going up, and I'm just going to catch the dip and everything's fine. And it's like, thank God I changed my mentality real quick, because these last 3 weeks, which have been very hard for a lot of people, and I acknowledge that, and that really stinks, for me, have been really good, because I've been equipped for it, and I've kept a level head. And when I present my TA, I try to paint, like, both sides of what I'm seeing, So I'll say, like, hey, if SPY's gonna break above these levels, which it needs to, then that's going to tell us, the market is gaining strength. That's a good thing. However, if it doesn't break above these levels, expect it to go lower. Like, I'm trying to paint a picture on both sides, for people. And the benefit too is, being that I don't, like, 99% of everything I post is not anything that I even have a position in. That makes me that much more, like, useful to my own followers and useful to Twitter as a whole, because I truly have like this objective, like non-bias, no attachment analysis to what I'm presenting. And I know like sometimes I've had to put a disclaimer at the end of like this long list of TA that I'm saying, and I'll just say like, I don't have a position in this, because I've had people just, you know, get so dang pissed off that they're like, yo, you're trying to push this, you're shorting it, you're doing this, and that's just, I mean, again, Lana, I know that you said you don't like to share TA and you feel there's other people that are better at it, and it's like, no, like at the end of the day, like I'm honestly surprised some of the stuff that I share people have found so valuable, simply because like I don't really like, I don't know, I guess I try to leave out my ego when I do stuff as much as I can. I know I'm not perfect, but I think you have a lot to offer the community, just like everybody here, right? I mean, I'm looking at Mike and Chetta and Joshua and Howie and all these people in here, and it don't matter how many followers you have or you don't have. You got something to offer, you got ideas, share it. Learn what you can, like surround yourself by people that like you want to grow with and be better at.
I can promise you the smaller accounts has more money, because they're not busy chasing clout. They're busy trying to make money, and they're not focused on that. That's nature. I mean, that's just what it is. Most people that's making money and sitting back, they're not worried about all the other BS. Yeah, I mean, it's just not the trait. It's not the trait for someone that is successful, or whatever. They're not focused on other things. They're focusing on their money, and they care less about the rest. Because I've been around people that's successful, and I'm telling you, they don't have time to even be on Twitter. To be honest with you, but yeah, you just can't discredit people with smaller accounts of what they know. They're just coming to help, and I appreciate them. And I appreciate everyone in here. They probably have more knowledge than you think, and I don't ever judge anyone by just their follower size. Like I don't care for that,
Right. So some of my favorite accounts to follow, and guys and girls that I trade with, like in a Discord or like a chat, most of the ones that I like trading with the most, or like talking about stuff, they don't have a ton of followers, guys. Like those are for me, like I don't like, yeah, you can have a ton of followers and stuff, that's fine, but like that doesn't define you as a trader, and also what you can offer the community here. So that's why, like from day one, I've just, if I got something to share that I think might be valuable to someone else, that isn't like in any way trying to um, get myself something to gain from it, like I don't need to be pumping a stock. Like I like joking around about stuff. Like I'll put a meme like, did I load up on CFVI last Friday? Like like I'll put a meme or something. But like I don't need to be pumping a stock. For me, I think I get more enjoyment like knowing that there's people like you on here that are saying, yo, Dagger, I am like, my trading game has like improved so much and things are clicking. Like for me, that's like way more satisfying.
Me too. As far as pumpers go, I can tell you this. This is what I wrote out at my friends on Facebook. I have some that actually made an account just to follow me, because I made them so much money because I was trying to help out people. And I was like, just don't question me. If I call out something, I just want you to get money, because I'm so convicted. I'm 1,000% sure of KT running up that day. I was like, it's going to happen. And everyone chased that day, and it happened. And I said to them as well, I also did not also told you to take profit. So please don't make me responsible if I'm sharing this. But with pumpers, I said to them, I was like, the whole market is a pump and dump. I don't care what anyone says. This is the biggest casino you're playing in. What I realized with pumpers, if someone is pumping a stock out, please be aware that they pretty much front loaded. They bought in at 60 cents. They posted at $1. They gave a $10 price target, and they probably sold at $5. You have to be smart with it. If you're going to get in late, don't chase it. Get in early. Otherwise, just don't chase it.
If you're going to get into a pump, just make sure you know it's a pump. If you identify what it is, you can still make money off of it. That's totally fine. Some people, that's their thing. It's momentum. And I'll encourage you to use that DMI indicator so that you don't catch a knife, but instead you actually are ahead of it and identify it. I'm telling you, that DMI, I've prevented in the last like 5 months on momentum plays. I've probably prevented, like I've sold my position entirely, like at the top, probably 5 or 6 times now during a obvious momentum pump play that I said, you know what, I'm going to enter here. I'm going to see what happens, whatever. Use that DMI on that 2 minute and 5 minute. Watch a bearish price spread crossover, a real aggressive one, and get ready. like I'm telling you, it just works like clockwork for me, at least. The knife comes like anywhere from 2 to 5 or 2 to 10 minutes later. Huge.
Also, if someone is attacking you for posting a bearish sentiment on a stock, please keep in mind that they are stuck in that ticker and they will get pissed at you. You have to look out for you. Your money is your money. No one is going to take care of your bills but you. But please keep in mind that if someone is pumping a stock and they're pissed at you for saying something that goes against their ticker, they're stuck. They are 99.9% they're stuck. Just keep that in mind.
And also with that, Lana, too, it's also not worth your time to even respond to some of the toxic stuff. Like you'll notice if you see someone comment on my stuff, something nasty, just don't give it any time, because I'm not going to give it any time.
Yeah, the best thing to do is let it go away. They go away eventually.
Yeah, like if anything, I hope they keep following me and then actually like adapt their trading style based on what they see. And I mean, I've already gotten someone to reach out to me and be like, yo, I followed you way back and I didn't like you at first, but I've actually applied like the stuff that you've been sharing. And, you know, I just want you to know you've really like helped my trading game now. And for me, just knowing that like at any point, if that person said something that I could clearly like respond to and, you know, say whatever, that I just didn't, that I just ignored them. And, you know, things come in full circle. So when people got money in a stock or a ticker and it's down, like it's hard. So yeah, you're going to have some people who act out real stupid. But I see Darth Walt. I love that name, by the way. Looks like you got a question.
Thanks. Yeah. Well, a comment is, first of all, this has been one of the like most organized and educational space calls I've been on in a long time. And it's amazing how much information can be shared and talked about and hashed out when not everybody's like screaming over each other. It's just so pleasant.
It won't happen here, I promise you.
My personal background and my career, my business is I am very psychologically oriented. The manipulation aspect of it. So when I see things like this crypto dump, when I see this inundation of the FUD and how powerfully it's being pushed, these are tells to me that somebody's deflecting, somebody's playing CYA, and there is a massive problem on the horizon. And that's just from how I read people. And when I realized how much of a psychological screw job all of this market was, that's what really drew me into it. It was like, okay, I know I can play this game. And then to be able to access the technical analysis of it and not just be like this, oh, trust me, bro, you know, crypto is crashing, something's going to happen, and be able to like lay out a full say, like, okay, here's why I feel this way from my personal perspective, but then here's the technical analysis to back it up. So you can take my opinion on it and how I feel about it, but numbers don't lie. So this is like,
I love that you brought up the trust me bro aspect. I think that it makes me laugh so much.
Yeah.
I kind of, as a joke, just want to put like trust me bro at the end of like my tweets, just as a joke.
Yeah, I actually, it's funny, I coined a phrase on Reddit where I used to be, and it was like, it's trust me bronomics, where you can produce all of these numbers and all these fancy things, but you actually have no data to support it. It's just
Right.
yeah. So, I'm definitely going to immerse myself in this TA stuff and what you posted, because I really want to be able to show in numbers how I'm feeling and why I'm feeling this way, because it's easy for me to sit there and say, identify from my personal experience how the psychological and the manipulation of it's working. It's what I do. I deal with it 24/7 when I'm at work. So to be able to put the technical analysis into it to say, and this is why I feel this way, here's the numbers. I can't tell you how much I appreciate that.
I'm glad you're finding a lot of value in this, and I hope everyone here is. It's interesting you said that this was like one of the most organized spaces you found, because I didn't think that was the case. I thought maybe I wasn't organized enough. I mean, I couldn't even get YouTube Live to be ready today, but I'll have that squared away next time. I will say, I want to comment to everybody here, when this space is over, which I have to wrap up in about 6 minutes, I'm going to send out a tweet and just ask for feedback on future spaces to cover topics regarding TA. Could be market conditions. I know building watch lists and stuff. I did want to mention, though, with the watch list really quick, because Lana started talking about it, and I forgot to interrupt her, but she was talking about like sympathies. She mentioned LCID being a Tesla sympathy. If you're new to trading, one of the best things you can do is build a watch list that follows market conditions, market volatility, which in my tweet or in my thread, I have those watch lists you can use. Those are the exact ones I use. And then secondly is, as a new trader, build watch lists, like sympathy watch lists around tickers. So like if like I have one that's surrounded by Tesla. Like I have an EV watch list. When Tesla runs, these things generally run with it. So if you're a newer trader and you're like, where do I even start? What do I even look at? And you don't want to get lost in translation following, low float pumps on Twitter, throwing it onto your watch list and thinking that out of all tickers is your only solution to make a good trade. It's not. Find things that are running, identify them for what they are, like if they're in a particular sector or space, and make a watch list around it. Like on Webull, I have an EV watch list around Tesla. I have a crypto miner watch list around Bitcoin and Ethereum movement, right? And it's like the easiest thing. You wake up and you're like, oh, Bitcoin and Ethereum is getting cranked. Like, I'm going to look at my sympathy watch list just as a default to look for scalps, to look for swings. And before I forget, so I do have to get off here very soon. People are tweeting, buy the dip, buy the dip, buy the dip. It's a number of different stocks and securities. I'm not just talking GameStop or AMC. I know that that's very common for people to say buy the dip for that, but it's a lot of stocks. It's people who have done the DD. They're emotionally invested in something. However, overall market conditions are pulling everything back as I would expect. Here's my advice to you. If you really want to buy the dip, but you want something tangible to look at, something that will give you peace of mind to make an make an entry, and identify those true opportunities, those true dip buying opportunities, this is what you do. Use your 1 hour chart, your 4 hour chart, like I do during pre-market every single day, and wait for those moving averages to start curling back up and start making new crossovers. when you start seeing a moving average curl up on the hourly, on the 4 hour, and it's heading towards a crossover, that's your first opportunity of, hey, this is a sign of strength for the market. Okay. The greater the spread as far as the moving average, so like if I'm doing a 21-day moving average and it's about to cross over a 200-day, which is a big spread between those two, that is going to be an even more significant price action you'll see leading up to that crossover and then also following it. So what I'm looking at, right? If I'm looking to buy the dip, quote unquote, I'm looking at the 1 hour chart, the 4 hour chart. I want to see my 21-day moving average curling up and looking to cross over that 55-day moving average first. And that's my first opportunity of buying the dip, right? And if it crosses that 55 moving average, I'm watching it like a hawk, because the next step is the 100-day moving average. That's the next test. If it rejects that, guess what? It can very much go down and go down even further, right? So when you keep an eye on those 1 hour and 4 hour charts, your moving averages especially will help you with entries and exits during these very volatile market conditions. So that's what I'm going to leave you with tonight. I have to get going. I appreciate everybody being here. I appreciate the questions. Please keep asking questions. It'll only benefit everyone, and I'll share it, retweet it and stuff so people can follow up with it. But thank you guys. You guys have a good evening, a good week, and I will see you guys tomorrow. All right.
All right. Thank you.
Thank you, Dago.
And also, we may do this weekly, right?
Yeah.
Amina?
Thank you, Amina, for everything. Lana, you as well for co-hosting. This was a long space, but I think it was probably pretty valuable.
Very.
Seemed like some good feedback.
Very, very valuable.
Yeah.
Thank you.
So I'm gonna shoot a tweet out and just ask for feedback on today, and also feedback for future sessions. When you guys have ideas about some topics, just list them out. If you have more ideas as the days go forward, just shoot me a tweet or something or comment on it. So, all right, you guys take care, all right?
Take care, guys.
All right, see you guys.
See ya.